So with this, I just want exposure to gold, the dollar value of gold essentially. And I can earn yield on that, you're saying, by buying C gold, which is over collateralized. And then I can pair it with a stable coin, USDC. And then I can stake that liquidity pair, C gold and USDC. I stake it on Vertek's DEX. And I earn the Vertek token as well as the CLF token. So I earn the Vertek token from the Vertek DEX, and I earn the CLF token from Collective Finance. And that's my reward. Probably going to buy a little bit of gold, a little bit of silver, and then I'm probably going to split my gold position up and get some C gold, pair it with some of my USDC, and I'm going to farm with it. I'm going to farm Vertek, and I'm going to farm CLF, and then I'm going to be like, okay, what am I going to do with that CLF token? Well, I might sell some of it and take some profits, or I might buy some Bitcoin or a representation of Bitcoin, BTCB, and I might pair that, then I might stake that, and then stake that, and then stake that, and then earn yield on all that as well. So I can take the money I was going to buy some gold with, and I could buy some essentially digital gold. I could put it with some of my fiat, but it's a stable coin, USDC. So I could take gold and stable coins, pair it, stake it, earn Vertek and CLF. I can sell either one of them straight up for cash profits, or I can then pair those with Bitcoin, like CLF with Bitcoin, and restake that, and then restake that again, and restake it again, and restake it again, and get yield all along the way. It's a really interesting concept, and all the while, I'm basically holding my value, essentially, that I started with in gold and a stable coin. So
correct.
That's my favorite thing. What do you guys think of the YaBonks strategy there?
Oh, I think it's a great strategy. That's the one I'm going after.
Yeah, exactly. Exactly.
I'm gonna get the gift. This you stake it, you stake it, you stake it. I gotta get that. Get that gift.
Gotta get the manic eyes in there. That really shows how many stakings is happening, right? So
yeah,
exactly.
You get the CLF, you pair it, and you stake it, and you stake it, and you stake it again.
That's right. Yeah.
So, hey, guys, this has been great. I've learned a ton. I got to where I need to be with understanding my risk-reward ratio with collective finance. And with everything we talked about, I am personally going to take up a position with this.
Thank you, man.
As soon as I can convince my wife. It's like, where's this magic money coming from? And I'm just like, it doesn't matter. It doesn't. It's internet magic. This is going to be one of those ones that I'm going to dip my toes in on. I like all you guys. I've known you all for a while, so I have a high level of trust with you guys, more so than 99% of the people out here in DeFi. So you guys are in the upper echelon of my personal network, and I think you guys have a really cool idea. I personally am a precious metals bug myself. I don't have a ton of it, but I believe in it in a philosophical, historical perspective. And I think any person who is trying to protect their wealth and is any kind of a prepper would have some cash on hand, some precious metals on hand, and some Bitcoin on chain. I think you guys provide some interesting vehicles for having exposure to the gold and the Bitcoin and silver and diamonds coming down the road potentially, and allowing people to earn yield while holding something that would be normally a stagnant commodity that just maintains and retains value. But now you guys are providing an opportunity to not only retain the value of your gold, but to earn incremental yield rewards on top of it. However much that is, we don't know yet. We'll see how it all plays out. But anything is better than nothing. And yes, I think we fully covered what risks are to achieve that reward on your gold exposure holdings. So that is my conclusion there. Did I sum that up effectively?
Yeah. You did great.
I'd say you nailed it.
Yeah. All right.
I'll put the gold stamp on it, man.
There we go.
Yeah. And thank you too for saying those things. You know, it means a lot to us when folks like you, who we respect their opinion so much and see a lot of protocols come across your radar. So we really appreciate you saying that. So thank you, man.
Mm-hmm. Hey, my pleasure. It's the truth. If I have something good to say about somebody, I will say it. I'll go out of my way to say it. So I think you guys are the right people for this project, and it inspires confidence in me that you guys are going to manage it well. I'm going to put about $1,000 on that pre-sale, which is a lot for me. It's going to be one of my larger DeFi positions. And then on my next allocation for precious metals, which isn't going to be a ton of money, but I will split my gold investment that I was going to make, like $500 or something. I'll put half of that into C gold, and then I'll take some USDC I got lying around, stick it in there, and put it to work in Vertek. So yeah, this is really cool. I'm excited about this one. I'm a precious metals bug, and you guys are allowing me to make yield to earn rewards on my precious metal holdings in a way that's over collateralized and minimizes risk and custodial risk. I don't have to have like a kilo gold bar, which I couldn't, I can't have anyway yet. I'll get there someday. But if I did, there would be thugs breaking down my door trying to get that kilo gold bar, and I'd have to kaplow, Molan, Labe. And I don't want to do that. That is the last thing I ever want to do. I would much rather minimize my custodial risk of my precious metals, only keep a month's worth of expenses worth of precious metals on hand, and then the rest put into a more liquid form that has better custodial practices like you guys with over collateralization of the gold, as well as that over collateralization being in PAX G, which is audited with 1-to-1 physical in vaults. I love it. I think it's a great idea. Full transparency, you guys. I have a positive sentiment here, and these guys didn't pay me to act like this. This is my honest emotion. They paid me for my time to work on this video, but like if this sucked, I would say, hey guys, I think this kind of sucks, right? But I don't. I think this is actually pretty good, and I think it's in something that I think is really pertinent right now. Full disclosure for everybody listening, the YaBonks strategy right now that I'm figuring out, and this is a project that I am personally excited by and about. I love the concept of all of this, earning gold, as well as messing around in the balancer style dexes with the boosted pools and multiple yield farms layers. I'm going to buy probably $1,000 so I can get that pre-sale NFT. I'm going to buy $1,000 of the pre-sale so I get a 10% discount, get the NFT. I'll figure out what to do with the NFT later. And then I just love NFTs, right? Especially our utility ones that give you residual rewards and stuff.
Give you
dude.
Gold
right.
and stuff. Who doesn't like a little bit of gold?
Sold.
Just a little bit.
You sold me right there. All right, I'm gonna get $1,000 because every $1,000 increment of pre-sale, I get an NFT that makes gold, and then I'm gonna take my pre-sale liquidity tokens that I get, and I'm just gonna stake them. I'm gonna stake them, and I'm gonna have these NFTs that I'm gonna hold, and I'm gonna be getting rewards all along the way. And heck, I might just stick those NFTs up on the marketplace at an out of the money premium. And if things change in the market and one day somebody wakes up and says, oh, that's actually a really good deal, and they take it, then I made my target profits that I was looking to make. So many strategies here, but that's what I'm going to do. I'm going to get it on the pre-sale with about $1,000, going to get the NFT. I'm going to stake. I might test the waters with a 30-day or a 60-day. Heck, I might go balls to the walls and do 180-day because I'm crazy like that. But then I'm probably going to, on my next precious metals investment, put half of my gold investment into C gold. And then I'm going to take that with some of my USDC, pair it, stake it, and then get Vertek and CLF, and then kind of loop that into the ecosystem again. So that's my strategy.
My name is Brian. I'm one of the 4 co-founders here at Collective Finance. My job at the protocol is really protocol oversight, direction, capital raising, and investor management as well. I am a real-world physician, have been so for about 15 years.
Hey, everybody. My name is Zach. You might see me as Cripzom. I am also one of the co-founders at Collective Finance. My position is in networking, investor relations, helping manage investments. I have multiple businesses in the States.
Greetings, everyone. My name is NP. I worked my way up, becoming a core team member in a couple of projects, and now working on a magnum opus of projects. together with Collective Finance. My main project would be Vertek, and we'll be very happy to host Collective Finance's liquidity once we are up and running.
My name's Chrome, also known as Jacob. Got the position as a mod and then slowly worked my way up to get on the core team and now on the operational and back end.
Probably the best way to earn the most yield in collective finance is the triple staking, triple yield reward earning method, where you stake CLF liquidity pair all the way down to the XCLF NFT, and then you can further boost those rewards if you understand how the Vertek DEX works and the Volta system, and taking advantage of that to get the boosted rewards based on the periodic voting system that boosts certain pools. If you understand how that works, if and when that happens, you can get 2.5x the rewards you're already getting. That makes things get crazy. Now, I think we all agree that that's potentially the best way to earn the most amount of yield in this.
Think about all the different layers of yield that you're getting, right? Just for staking, you're getting CLF and VRTK. And then for lock staking, you're adding that next layer on there. Without giving you a number, it seems pretty appealing to me.
You got your CLF token, and then you got your commodity tokens like Gold. And with your CLF token, you basically liquidity farm with it 3 times over. And at the end, you got this really interesting derivative product that has a marketplace on Vertek that you can trade and make potentially even more with your capital. CLF has like a whole stack of ways to make yield from it.
Don't take your eyes off of the native token CLF as well. CLF is the reward token. It's also the oil that drives the collective finance engine. So there is a potential upside in that. So make sure you hold a little bit of that as well.
From launch, we're not giving back free CLF. We're giving back liquidity. Our angel seed round investors, they receive locked positions as well as a vested token allocation. So when you put these two things together, we're going to incentivize people to lock, and then there's not a lot of free circulating supply. So both of those two things decrease sell pressure dramatically. If you combine that with some increased buy pressure, then I think volatility could play to your favor. Was when I received that liquidity position, I would be looking to stake that and then lock that as XCLF to start getting those rewards, right, immediately. One of the things that you want to keep into consideration, I think this was the point that Krypton was making, that if there's potential for the CLF token to have a significant price increase at the time of launch or even down the road, you want to be able to take profit as appropriate, right? Now, how could you do that? You could do that through the rewards that you earn through your lock stake position. It could be through the NFT that you own. You could break a small amount of your liquidity or a combination thereof, right? So I guess that's the point, to be able to use that volatility potentially to your favor when the situation permits.
Okay, good to know. And I could see that volatility going up if and when the voting happens in the Vertek gauge system, the Volta, if any of the CLF pools got voted for, or even Gold or anything related to collective got boosted, I could see a whole bunch of people buying up CLF tokens, pairing it, and then going down the triple yield staking process, right? So I could see that volatility at that point that you're talking about, Brian, especially during the voting periods. I would be on the edge of my seat, actually, be like, which is going to win the vote this week? And if it's anything collective, you're probably going to see a spike or something, or increased buy pressure. Just my opinion. Who knows?
Yeah, and remember, there's decreased sell pressure too. Sorry to interrupt you, but just like NP said before, right? If you have your XCLF position that's represented by an NFT, and maybe that's in a 60-day tier, but it's going to unlock in a few days, right? And it's timed with the emission votes and things, that could become much more valuable at that time. So there's the primary market you can play. There's secondary. There's a lot of things to think about.
There is. And also, if I'm looking to take a new position in collective down the road, I could check that Vertek NFT marketplace and see if I can't pick up a staked position that I was looking at anyway at a 5, 10, 20% discount because somebody is trying to trade out of their position to gain for whatever reason, or to make some, maybe they're selling at a profit, but I'm getting in at a discount just because of the timing of things, right?
Exactly.
So there are efficiencies there that I think people can find more than any other time in history. I feel like our monetary system's about to implode. I feel like fiat's about to just get wrecked. Honestly, personally, I don't know when it's going to happen. Not financial advice. I'm not a financial advisor. I can't tell the future, but our monetary system's so out of whack, and they're just kicking that can down the road, They're manipulating this stuff on paper day in, day out. At some point, this is going to get called in, right? And people are going to say, I want my physical. And they're not going to have enough physical for the amount of paper receipts they've written, right?
Yep.
They're not going to have enough CLF for the XCLF receipt tokens they got in their wallet. You know what I'm saying? You know, but you guys, you understand the analogy, right? Like they're writing these receipts that they're writing checks.
They're writing checks they can't cash.
They're writing checks their bodies can't cash. You know what I mean? But they're writing checks that their bouillon can't cash. And at some point, it's going to short squeeze like crazy. When that comes toppling down, I have a feeling silver is going to go up a lot. And I have a feeling gold is going to go up a lot. And even if it's momentarily, even if it's for like a few days or a few weeks where this goes 100x and this goes 10x, hopefully I'm going to be in a liquid asset that I can move around quickly, that I can capitalize on that rather than me standing in line at the pawn shop being like, hey, what can you give me for this? Oh, a 50% premium over spot? What do you mean? So I think this is actually really cool idea for me to have some liquid exposure to this stuff in a way I can earn yield and get in and out quickly if I need to. So boom, there we go. Hey everybody, it's Alex here, and on today's episode of the YaBonks Show, I have 4 very special guests with me today. I have Brian, aka Gold Doc, as you might know him. I have Zach, otherwise known as Cripzom in Discord. I've got NP, aka Jules or Xiong, but I want to call him NP because it's a little easier for me to say. And we've got Chrome over here, aka Jake. So a lot of names flying around and aliases and all that, and Alex, aka YaBonks here. So I have these 4 very special guests, and I say they're very special because I've known most of these guys for a long time now, probably a year, which in DeFi is a decade. And I have worked with them on previous projects in the past. I've known them all face to face for a long time. And they are launching a new project called Collective Finance. And it's a new project that's going to give users exposure to over-collateralized commodities on the blockchain in a way that allows them to earn yield while gaining exposure to popular commodities like gold. Like gold here. So I am big into precious metals. I'm a gold and silver bug for many reasons, like our monetary system and central banks and inflation and things like that. So this project is near and dear to my philosophies. Now, do you each want to say hi and just give us like a brief introduction about yourselves, starting, let's say, with Brian here and working Brian, Zach, NP, and Chrome. Do you guys want to give us a little intro?
Hi, everybody. I'm Doc, otherwise known as Brian. I'm one of the 4 co-founders here at Collective Finance. My job at the protocol is really protocol oversight, direction, capital raising, and investor management as well. A little bit of background about myself. I am a real-world physician, have been so for about 15 years. Over the last 10 or so, I've followed my entrepreneurial spirit, I would say. I have multiple businesses now, one of them multinational. I'm also a really big DeFi angel and seed round investor, and I've been a precious metals bug pretty much my whole life. So happy to be here, and thank you, Alex.
Hey, glad to have you here. And I've always known you as the Gold Doc. And I've known you for at least a year now out here. So you've always been Gold Doc in my head. So I'm glad you're here on camera on my show. Zach, do you want to tell us a little bit about yourself now?
Yeah, of course. Hey, everybody. My name is Zach. You might see me as Cripzom in the Discord. I am also one of the co-founders at Collective Finance. My position, I would say, my strong suit is in networking, investor relations, helping with managed investments. Gosh, I've been in the DeFi space for a few years now. I was kind of lurking in the background for quite some time before I dove full into Discord and went down the rat hole. But as for what I do in real life, I am an entrepreneur at heart. I have multiple businesses in the States, and I'll say that those are constantly working. It's always a battle, but I'll say that it's a good battle, and I'm excited to bring what we have at Collective Finance to the blockchain.
Very cool. And what about you, NP? You want to tell us a little bit about yourself?
Sure, of course. Greetings, everyone. My name is NP. Some of you may know me already. I've been in the DeFi space for about a couple of years now. I started as an investor just like everybody else, and then I kind of worked my way up to become a mod first, and then got onto the team in an advisory role, and then consultation, and then actually becoming a core team member in a couple of projects. So throughout the long time that I've been here, I've learned a lot of things, met a lot of people, and then now kind of working on a magnum opus of projects together with Collective Finance. So my main project would be Vertek, and we'll be very happy to host Collective Finance's liquidity once we're up and running.
Awesome. And speaking of Vertek, you and I have an AMA about Vertek coming up here in a couple days. So it'll be a nice lead in with this to kind of give an example of the power of the Vertek DEX. And then we'll deep dive into how all that works on the back end in a couple days when we do that AMA. And
yep.
And NP, for those who don't know, like he said, he's been involved in a lot of different projects, and I have covered multiple of his projects in the past as well. So he's probably a familiar voice and face for a lot of you out here. Now, Jake or Chrome, as you're here on the screen, do you want to tell us a bit about yourself?
Yeah, absolutely. So my name's Chrome, also known as Jacob. I've been in the DeFi space for a couple of years now, I think coming on to 3 years or so. I got into like traditional finance before I got into DeFi, so kind of stocks and stuff like that. But I realized it was a heavily gamed market, so that's when I kind of started to explore crypto, and then I dove straight into DeFi. I've been an investor in projects for some time before kind of seeing what has worked and what doesn't work for teams and projects. And then kind of the same as NP, got the position as a mod, and then slowly worked my way up to get on the core team. And now I feel like I have a pretty good knowledge set to help kick things off on the operational and back end type of stuff.
Very cool. And I've actually known you as Monkey in Discord for about probably close to a year as well. So I've been familiar with all of you guys for a long time. It's really cool to see you all coming together on Collective Finance. Now let's jump right in. So Doc, do you want to give me a brief overview of Collective Finance?
Yeah, absolutely. I'll give you a quick one. So Collective Finance, really at the backbone, it's a protocol that's built around multi-layered yield and focused on over-collateralized commodities such as gold, silver, and diamonds. And what we have done is integrate this into an entire protocol and built in a lock staking platform as well. So that the idea is for participants to be able to earn safe, consistent, ongoing yield, while the protocol is also built for growth at the same time. So we like to say that Collective Finance is built on gold and Bitcoin. So we'll get into more details about how, but that's the essence of what we do.
Well, I really like gold and Bitcoin, especially with the current economic climate that we are in, with monetary policies all over the world, especially close to home here for me in the United States. So on that note, Zach, do you want to let us know why you decided to make a project based on commodities like precious metals and other assets like Bitcoin, and why now?
Yeah, that's a great question, YaBonks. Thanks for asking that, man. I'd say that Bitcoin and gold, in my opinion, is a pretty good hedge considering where we're headed. And I'm referencing to not only United States economics, but global economics. I look at cryptocurrency like a global currency. So, the people that are misinformed and might watch mainstream media, they're going to tend to, push things in the direction they want to see fit. And that's manipulation of media as well. So you'll start to see some FUD, focused around, I would say you're going to continue to see FUD focused around Bitcoin, cryptocurrencies, because they're going to want to direct folks in a fashion that's going to benefit them and giving them a better entry point, if you know what I mean. So I would say the reason that we kind of pivoted over the last year or so, I should say. I mean, we came up with this idea for quite a while ago. We didn't really start implementing it and building the project until about 6 or 8 months ago. But we saw this coming kind of down the chain. Precious metals, gold and silver, they've been somewhat suppressed over the last many years. But it's always been a currency that's been recognized for ages, right? I mean, if anybody's a Christian or read the Bible, it's in the Bible. I mean, it's been thousands of years they've been using gold and precious metals. So I think that it's time with the market right now to be able to kind of pivot and hedge against the inflation in a fashion to pivot towards gold or Bitcoin.
Yeah, I totally agree. I think gold and silver have been considered money longer than anything else. And
yeah,
I think they are, the safe haven asset of choice for investors all over the world and hedge funds. And Bitcoin is kind of like the new age gold, but it's still the new kid on the block, right? And even though it does some things better and faster, people are still maybe a little skeptical, which we can use to our advantage as adoption is still early. So if we're all positioned well during this next inflationary quantitative easing, as they say, I think being in Bitcoin and gold and silver and potentially diamonds, Doc, we'll get into that. I know you have some interesting thoughts on that as well. I think the timing of this project is like ideal, like right before that linchpin flies off, right?
Yeah, I think another thing I want to bring up too is that, I'm holding coins in my hand and I want to make a quick presentation to kind of get people to understand how we're kind of thinking this, right? I mean, so you have a store of value, right? So you have either, silver or, the big one is gold, right? So I would say, how liquid ask yourself, YaBonks, like how liquid is this, right? Yeah, I mean, how liquid is that? I mean, I can tell you right now that this to me right now is not as liquid as it would be cash in the bank, right? I mean, I could potentially take some of these precious metals and cash them in, but I guarantee you that I'm not going to get out what I would like to, right? So then I'm going, okay, you can either hold a bunch of this stuff in your vault, which I think, I know I'm not against holding some of it totally. I mean, I totally agree with you. That's why I hold it. But I also think there's a certain point where you go, okay, am I really going to store value and a lot of value into gold and silver in my safe that's not really making me any money? Or am I going to actually maybe put my capital to work, which is where my entrepreneurial spirit kind of comes in. And I always think of, it's okay for me to be cash poor if my businesses are continuously progressing. So I store my value in something that I see is going to generate revenue long-term, right? So everybody holds gold and silver hoping that they're going to have a price pump at some point. But instead of waiting around for that, well, we could get exposure on both. We could get exposure for the potential upside on gold and silver and Bitcoin, but also doing that too, you can earn yield on it while you're doing it. That's really unique.
Yeah, and that's the beauty of DeFi. You can come up with cool mechanisms like that, and you can manage the custody of all of those assets backing whatever system you've come up with, so that way you can have that exposure, you can have it secured in a way that's almost like insured, but it's collateralized, it's backed.
Correct.
And it takes away some of that over collateralized, and we'll get to that with how you guys have over collateralized the backing of these tokens. And this really brings self custody into the discussion, because like you said, how do you hold all that gold and silver in a vault in your house and not stay up at night thinking a gang of marauders is going to come in here and rob me, right? Do I have enough guns nearby me to effectively self custody these assets, right?
Yeah, sure. I guess I don't worry so much about that because of my location, but
me neither. I mean,
yeah, I can see what you're saying, though.
Not everybody has the privilege of owning firearms to be able to defend their property, their real world property and real estate and everything, the same way.
Correct.
So I consider that a privilege of ours. But again, that's a scary proposition either way. Like, I don't want to go down in a blaze of glory just to protect some metal sitting in a vault somewhere. Now, I do want to have like a month's worth of expenses in precious metals in case the internet's down and the grid goes down and the fiat banking system implodes all at the same time. Like, I still got a month's worth of like bartering ability with real money, right? If my fiat's worthless and the internet's gone and I can't access my Bitcoin at the moment, I can still buy and sell things. And that's why I try to keep a month. Anything beyond like a month worth, I would probably have a bank or some other specialized company custody my gold and silver, or I would be looking for some kind of digital representation that is collateralized or over collateralized that I would be able to trade quickly with liquidity, so I can get in and out quickly, and then also not have to worry about it just evaporating overnight because of custody issues. Now, that was a lot for that little part there. So I want to keep this moving. We'll circle back to that. NP, do you want to let us know a little more about what makes collective finance different from other fractionalized commodity crypto projects?
Sure. So I think the first thing that is very important to distinguish collective finance from other fractionalized commodities is that the collateral is on-chain. So that's the first thing. So all of the others, like the USD AU one, as well as PEXG, it's all off-chain. So it's all collateralized off-chain, which means that you have to go and check whether they really have it or not. And a lot of times what they do with the off-chain access, because they have to pay for the location as well as for storage fees and all that. So they have to earn on it somehow in order to continue that storage. However, in our case, if we have it on-chain, because we have all the collateralization on-chain, you can literally just check the wallet in 2 seconds, and you see that all the collateral is there, and we don't have to pay storage fees for it. There's the amount that we have to spend in order to keep it collateralized is much lower, and also we have the ability to take that collateral and leverage it perhaps in another decentralized protocol to increase the collateral ratio, which means we can have more circulation of the C gold token. And this is just C gold. When it comes to C silver and C diamond, it gets a lot more interesting as well. But I think that's an first important thing to distinguish between collective finance and other types of commodities on the blockchain. Second thing is, I think this was mentioned before, that we can earn yield on those commodity tokens. So that's actually a very important point, because the liquidity right now, for example, I'll use the gold example again, for something like PEXG or USD AU is not very high. So you can get it on an exchange and you can just hold it, but you can't really earn yield anywhere. You can't really form LP. I think you can form a little bit of liquidity on Ethereum, but if you're not the kind of person who can afford the gas fees, you're probably not going to be able to participate in that. So that's the first thing, right? Yeah, yeah. There are a lot of people, right? So, and then the second thing, built on top of that, or to extend to that point, is that if you can make it, if we can distribute this or issue this these C tokens towards mass adoption, it'll be very easy for any DeFi investor, new or old, to instantly gain exposure to a commodity of their choosing. And they can do it 24/7, 365, all the time. Never closes, don't have to pay a middleman, don't have to pay storage fees. It's not stuck in your house when you're home. You don't have to worry that you don't have to pay for what's it called, when the design costs. Sometimes when they make the coin,
mint price.
Right? Yeah, you pay for workmanship.
The premium
workmanship. Yeah, it's like the workmanship cost. If they have a design or something, they get you to pay a little bit more, right?
Oh yeah, like the
So
collector, like the collector fee over just straight bullion. Yeah.
Yeah.
Okay.
That's the one. So you don't have any of that. Straight up, just gold, just silver, just diamonds. Like it was mentioned before, incredible store of value. I think over time, precious metals have held their purchasing power and increase in their with regards to inflation. So it's I think it's very sorely needed in the DeFi space, and that's really something that we're trying to achieve.
Man, well said, NP, bro. I say this all the time, and it's not to flatter you, but you're so well spoken. And I think your IQ is just like off the charts. That's my like honest assessment. I've said that for like a year since I first met you, man. You're super smart, and I'm glad to know you, because when I don't understand something and I ask you behind the scenes, you break it down so well, and I was like, oh man, yeah, I didn't think about that or that or that or that. So man, well said. I'm gonna come back to you quite a few times, because that was just well said, man. All right. Now, sorry to make you follow that, Jake.
Yeah, right.
But before we dive any deeper into the nuts and bolts about how this all works, Chrome, do you want to let us know, do you guys have any news or announcements or any special dates or anything going on that you want to share with the audience before we deep dive into this thing?
Yes, absolutely. So we have our pre-sale, which is live right now, and that's going to be lasting for approximately, I think, another 11 or 12 days. So it started on Friday, the 17th of March, and it's going to go till the end of the month, to the 31st. So approximately 14 days long. We plan to raise approximately, for the soft cap, 150K, hard cap, 500K. So it's a 10% discount when coming into the pre-sale. You can enter with BUSD or USDT, and the project, just to note, it's on Binance, BNB or BSC. You get the 10% discount. It's at USDT, BUSD. There's no limit on the max, so you can come in with as much as you would like. And now is the right time. Actually, quick important note too, the tokens you'll be receiving are not just the native token itself. So in traditional pre-sales, let's say you get the 10% discount, you put in $1,000. So you get $1,100 worth of the native token of the project. For us, we're going to be giving back liquidity positions, and that liquidity position is the CLF and Bitcoin. So it's CLF token paired with Bitcoin on Binance. That is what you'll be receiving when participating in the pre-sale. There's also an exclusive pre-sale NFT, which is a C gold focused NFT, meaning it'll earn you rewards in our gold token throughout the life of the project. So to get one of those, you have to enter in with at least $1,000, and it is one NFT per 1,000. So $2,000 would be 2 NFTs, right? Now, to get this NFT, you have to lock your position, the entire position that you got from the presale, within any of the lock staking tiers that we provide in Collective Finance, whether that be the 30-day, 60-day, 90-day, or 180-day.
Okay, interesting. So that's a little different type of a presale there. So just to clarify, you've got like a small minimum, $25 or $50 minimum to get in, but no upper cap, and every $1,000 increment, you get a special presale NFT that gives you special rewards and kickbacks throughout the life of the project. Is that right?
Correct. Yes.
Awesome. And then instead of just getting the CLF token or the C gold token, you get a liquidity pair. You get CLF paired with BTCB on the Binance Smart Chain. So you get a liquidity pair. I think that's actually kind of clever, because instead of just like dumping a whole bunch of tokens out there that just sell and then wreck the liquidity, you're actually taking all the pre-sale tokens that you would and making liquidity with it, giving it to the users as liquidity and saying, do with it as you will. But, you know, it's I think that's smart. It actually seems like it would help protect the liquidity right off the bat when it matters most. So no, that's a clever idea, and the NFTs on top of it. Which, by the way, to get the NFT, you have to take your pre-sale liquidity and stake it for 30, 60, 90, or 100 days, right?
Yes, so that revolves around our lock staking program. Just a quick touch. So another reason why we're giving back LP is because it allows easier participation within the ecosystem right off the bat. So instead of having to get the token, create liquidity to then participate within our ecosystem, you'll be ready to go right off rip.
Okay. And I like how you guys are paired with BTCB, which is what I believe is a fully collateralized by Bitcoin asset on the Binance Smart Chain, BNB Smart Chain, or whatever, however you want to call it these days. But Binance has done an excellent job, I believe, of fully collateralizing their BTC wrapped version, their wrapped Bitcoin, with 1-to-1 Bitcoin verifiable on chain, correct?
Yep.
Okay. And I think it's a lot of people these days are, we're in the bear market. We got to pair with a stable coin like BUSD or USDC. As we know, because of the news, those are under fire right now, under a lot of heat because of the SEC trying to poke holes in Circle and USDC and Binance and BUSD. So I actually think it's a good idea that you guys went with BTCB, which is a fully collateralized Bitcoin asset on the Binance Smart Chain, verifiably. And since it's paired with that, and we're in the bear market, and I think we're near the bottom. Personal opinion, not financial advice, but I think we're kind of near the bottom. We might dip a little more, but I think we're about to start trending back up. And being paired with something like Bitcoin, you're gonna see gains from that upside. So just on that pre-sale token pairing, the LP you get, the CLF and the BTCB, like that's half your value right there is in Bitcoin, right? So like, if I'm trying to convert some of my USDC, which I think might be a little sketchy right now because the banks are collapsing that holds their collateral in dollars in the fiat system, which scares me. I might be trying to convert some of that USDC into BNB and Bitcoin and Ethereum, but mostly BNB and Bitcoin personally. So I could just pick out, maybe I'll get $1,000 going to these NFTs, and I'd be getting basically $500 in Bitcoin and $500 in CLF, and then I can earn yield on the whole thing. Did any of that make sense based on your project?
Yeah, I think something to note too, you just mentioned a 50-50 split for the LP, but NP over here can actually talk a little bit about something special that we got going with Vertek.
I got a question about that, so good catch. Yeah. NP, do you want to explain why your liquidity pairs are special?
Yeah, so for the CLF BTC pairing, instead of the traditional 50-50 ratio, it will be 30-70. So 70% will be CLF and 30% will be Bitcoin. So the idea there is that you can you get a little bit more exposure to the CLF side, which is the speculative token that people would like to have if it goes up a lot. And then there's the 30% hedge, which is in Bitcoin. And another nice thing about having Bitcoin as the pairing and not a stable coin is that you benefit from all of the upside, like you mentioned before during the bull run. If Bitcoin goes up, because your CLF is denominated in terms of Bitcoin, the price naturally goes up as well. So that's the first thing. And then the second thing is you might ask how that happens, how you get 70-30 instead of 50-50. Well, the Vertek DEX is a Balancer V2. It functions on the Balancer V2 technology, and it allows for liquidity pools to have different ratios. So instead of just having 50% one token, 50% another, you can have 70%, 30%, or 20-80, 90-10. I believe 90-10 is the maximum differential ratio. And then you can also have multiple tokens inside. That's a conversation for another day, but with regards to CLF BTC, that's how it's done. Yeah.
Okay, so it's 70-30 split, 70% CLF, 30% BTCB, and that gives you more exposure to the more speculative token CLF, which should potentially would have more upside as a new token and a new protocol that would be gaining liquidity and TVL proportionally much quicker than something as big as Bitcoin with the large market cap it has already. Is that right?
Yeah, that's about right. So there's a second part to that as well, which is quite interesting. So if you think about our lock staking platform, right, you get the liquidity token, which you lock inside there. Now, the thing is, how do you get more CLF, right? How do you get new CLF? If you're just entering ecosystem and you weren't in the pre-sale or anything, you either have to buy it from the market, or you were in the pre-sale and then you're farming more CLF. So as you get a whole bunch of CLF, the way that you create liquidity is you go to the LP pool, then you put it in, right? So you can, everybody's familiar with zapping, which is you just put one token in and then it automatically changes the ratio or accounts for the price difference, right?
Yeah.
So in the case of 70-30, the price impact of you just putting in CLF is much lower than if it would be 50-50. So that's an important point to note. And that's also another reason why having more CLF in the pool is very beneficial, especially for the protocol. So what it does, you have that 30% Bitcoin hedge, but you also have the 70% speculation, which you on the CLF token, which people like. Then also you have you have reduced sell pressure when you deposit only CLF to the liquidity pool.
Interesting. Okay. So CLF is also one of the reward tokens of the ecosystem. So when somebody earns CLF tokens and they put it on the market, essentially into the liquidity pair, the effect it would have in terms of diluting the value of the other CLF tokens would be minimized by this 70-30 split, correct?
Yes, that's a very good description, actually. Yeah.
Very cool. That's super interesting and not something you think about often. Like, you got my gears turning as usual, NP. Thank you for the mental stimulation here. I learn something new every time I talk with you, man. So that's very cool. So you get the upside of the CLF token on the speculative side. You get 30% BTCB as the hedge, and then also sell pressure into the liquidity pool on the CLF side would be minimized in terms of price action and diluting the BTCB value of each CLF token. I'm freaking out. That's pretty awesome. So this ain't, this ain't your grandma's pancake swap. I'll tell you what.
Yeah. Cool.
So, yeah. So, all right. So let's jump into it since we're already basically knee deep in it. Let's see. What do I got here on my fancy question list? First thing I want to know is, where does the name Collective Finance come from? Why did you guys pick that name?
That's actually a pretty good question. So I can lead this off a little bit.
Okay.
I was kind of one of the first ones to kind of be getting like the name and the white paper and stuff like that. I went through a couple different renditions in my head. At first, it was like trying to bring the word commodity in, like precious metal, commodity, mineral, things like that. So like I had a couple different ideas, but then once we all kind of came together, that's when the gears started turning essentially. And we realized that it was a collection, like everything is a collection here. And that's what it is. It's a collective. So yeah, that's how we see it.
Cool. Okay. That makes sense. So it's a collective of different assets, real world and digital, all coming together, fractionalized.
Yeah, it's a bunch, as well as us, even the team, the collection of the team, the collection of the assets, the collection of everything. Yeah.
Think of the logo like almost like a beehive, right? The bees are out collecting.
Yeah, let me show that. That is right here. Can
Correct.
you guys see that? Yeah, so that's that's the logo for Collective Finance. It's like a beehive. Okay, that makes sense. All right, so we already clarified this is going to trade on the Vertek DEX on Binance Smart Chain, and it's going your main tokens CLF and is CGLD, which stands for C Gold. Gold, C Gold. Are those two tokens both going to be paired with BTCB?
No. So the CLF token will be paired with BTCB, but the C tokens themselves will be paired with a stable coin.
Okay. And I'm guessing that makes it easier for the calculations for the over collateralization. Okay, that makes sense.
Yeah, NP would be able to answer that one.
So which stable coins are you pairing with the C tokens, like C Gold?
The USDC, I believe, and that'll be on the Binance Smart Chain.
Okay.
So, okay, the thing is, it doesn't really matter which stable we choose, as long as we choose a stable that is actually stable, right?
Yeah.
So that's the thing. So we try to avoid the ones that use fractional collateralization. We go for the highly audited one. UCC is really big, right? It recently did depack, but it still got back to where it's supposed to be. So, and exactly as you explained, it'll be a lot easier to manage the collateral ratio if you don't have one of the tokens in the pool just moving and changing the price of the C Gold token all the time. So, yeah, that's the reason for that.
Okay. And for the record, even with USDC depegging 10% and bouncing right back, like they were still basically fully collateralized, and it was a market scare based on the news and everything like that. I'm still diversified in my stables, BUSD, USDC, and some DAI and some USDT. Like I'm still in USDC. I still believe in it because, like you said, they are very publicly audited with dollars and other assets backing it.
They also have a very, very big shadow investor. Well, not shadow anymore, right? That BlackRock is behind them.
Yeah.
So
I was just going to bring that up too.
Right. So it's very, very big. I think what happened with the depegging is actually the timing that was very, very good. Whoever decided to try and start depegging it or flooding it picked a very good time because it was over the weekend. And USDC, even though the coin is decentralized, the redemption is only available once the banks are open. So over the weekend it was closed, right? If you flood during the weekend and things get depegged over the weekend, you can't redeem coins. So market actors can't arbitrage it back up to $1. So that was pretty sneaky. Whoever started that.
My conspiracy theory is this is still kind of a battle between Binance and USDC / kind of deeper US based entities like BlackRock and Coinbase against Binance. I think they're kind of fight each other, and then the SEC is just kind of like, like taking shots wherever they can.
At the hip.
Yeah. That's
or
maybe I could be completely wrong, but that's like if my tinfoil hat time. I think this
maybe it's worse. Maybe it's worse. Maybe it's worse. Maybe the battle. Maybe they're really coming after stables, right? Maybe just stables as a whole. When you look at central bank digital currencies, right? Is there a room for stables anymore? I would say no, right? And just the government controls stables. No. Is the attack on the individuals or the idea behind a stable coin, right? So again, all roads lead back to gold and Bitcoin.
and like I heard the USDC thing was based on somebody like strategically shorting some things that made the SVB bank go under, and like NP was saying, right at the weekend when people can't exit their positions during banking hours, when people can't trade stocks, like it was a total S show. And I don't know, that's besides the point. I still think USDC is a strong stable, and I think BUSD is still a strong stable. And like Doc was saying, I think there's going to be a ongoing battle against the central banks and stables and crypto in general as they're trying to roll out CBDCs and bring in more regulation and things like that. So, all right, off topic. We'll get back to that later if you guys want to. But you said CGLD, so C Gold and later C Silver and C Diamond and whatever else C tokens. Those are backed by USDC stablecoin, so that way you guys can more easily remain collateralized with your calculations and asset allocations. Now,
Also pegged.
Yeah, Alex. And real quick too, you said that CGLD. Just to clarify, that was collateralized by USDC. That's not the case. It's paired with USDC.
Did I say collateralized? Yeah, I meant paired. Yeah, thank you for catching that. So yes, paired in the liquidity with USDC. But they're over collateralized with, I believe, PAX-G, right?
Correct.
And we'll get into that. It's super important, by the way. The over collateralization, I think you're collateralized 110% with PAX-G, which is a fully backed and audited gold in a vault, fully audited, 1-to-1 on chain for each ounce or something is. Anyway, we'll get into that in a second. I got a few other kind of basic mechanic questions I want to get out of the way here. Do you guys plan on trading any of these tokens on central exchanges at some point, like any of your C tokens specifically?
I'll answer this one. My answer would be right now, no, because I wouldn't want to deal with any of the regulatory headache that comes with that. So the boys may disagree with me, but as it stands at this moment, my vote would be no.
No, I think that's well said, actually. I think keeping everything kind of decentralized is what we're aiming for. We want everything to be able to operate in its own manner. And on a centralized exchange, you don't own your funds, right? So we want people to have self-custody of their own assets in a decentralized manner. That's what DeFi will offer.
And NP, what do you think? You run the shiny new big DEX on BSC. So you're in the exchange business. What do you think? Do you guys, in your opinion, do you ever see this going to a centralized exchange?
It depends on the adoption rate. So what happens for 99% of all tokens and coins is they ask the exchange whether they can be listed. After you reach a certain threshold or critical mass, they will ask you, or they'll just do it anyway. They'll just go buy a bunch of your coins and list you on the exchange. So I think that eventually is the idea that we're trying to go for. We want to keep it decentralized, like Jacob was saying, and keep it self-custodial. If eventually a centralized exchange decides to pick it up and list it, that's fine as well. That's their prerogative, right? It's still DeFi in that manner. Now, I think the second important thing to note here is that with centralized exchanges, the way that they will control the price is a little bit different. Ours is pegged to 1 gram of gold instead of 1 ounce. So I'm not sure how they would maintain that on the exchange. They do a lot of weird stuff on centralized exchanges with the order book. So
I see. That's it. I think
keep it DeFi is better. Yeah.
Yeah. Well, I like what you said there, where when you're small and demand is not high, you have to pay to get on to the central exchanges. But when you are big and popular and demand is strong, and they will want to get you onto their central exchanges, in which case they could just buy your tokens, make liquidity for themselves, and just let the market do what the market does. And in that case, that your strategy is just do so well in DeFi that CeFi just wants a piece of it for themselves and goes out of their way and spends their own money to get it. And you guys don't have to do anything, and basically the price of the token would just go up from that buy pressure. So no, I think that's a great answer. I think it's strategy.
It's also important to recognize that I think the target audience that we're going for are not people who would traditionally be inclined towards centralized exchange trading. It's more for the those who are much more leaning out to the DeFi side, because you can acquire the token decentrally. You can do whatever you want with it. It's all yours. You don't have to pay anybody in between. You don't have to pay any random storage fees or things like that. And it's a commodity, and it's an actual commodity that is over collateralized. So it's like having your physical a couple of bars of gold in your head, in your mind, because if nobody knows your
seed phrase, right?
If nobody knows your seed phrase, then it's all in your mind. So
this is not my seed phrase, by the way. This is random notes that I took on Collective.
Somebody paused and zoomed in.
Yeah, they're gonna do that for sure.
Yeah, but I think it's the target audience that we're trying to capture. Is the DeFi crowd, not generally speaking the CeFi crowd. So and also for the traditional financial crowd, they won't be interested in it anyway because they'll just be holding a whole bunch of gold in banks or in their house or somewhere else. So what we really want to offer is to fill the market gap, which is in DeFi right now, which is there isn't really a very good way to get commodities and earn yield on them on every single blockchain. Yeah.
The other thing too, in addition to earning yield, that big shiny DEX that NP has, it opens up the, leverage trading with precious metals is really big, right? Out there in traditional TradeFi. So if you can incorporate that into the blockchain as well, and Vertek has the capabilities, to be able to do that at some point, it opens up a whole nother option. And that's, we always talk about it. When you look at the global crypto market, it's about 1 trillion right now, I think, right? The global gold market is 11 or 12 trillion, I think, right? So think about what portion of that is on chain, right? So the gold market by itself without silver is 10 times the size of the whole crypto market. It's insane.
Yeah, absolutely. And man, if you get futures trading of any kind, leverage trading, futures trading on Vertek with precious metals and Bitcoin and all that stuff, like that would be real cool. I would like that.
It's coming. It's coming. Yeah. Oh, you will pay for it.
Yeah. Well, that's great. So we'll put a pin in that, and when we do our Vertek AMA, we can break down how all that's going to roll out and everything. But that's cool, Brian, that you're thinking about that already with gold and silver through C gold and C silver and things like that, and being able to use futures trading or leverage trading through Vertek DEX, which is currently rolling those features out. So awesome. I like where that's going. Now, NP, you said there were no fees involved, like a central exchange might have some fees that you'd have to pay. So are there any taxes on any of these tokens in your ecosystem?
Okay, so yes and no. Right now, so the ability to have a tax is in the token contract. So it is there if in the future it is necessary, but it's all set to 0% now. And we're going to keep it at 0%, especially since the first flush of liquidity will be on Vertek, which means that just because of the technology that Vertek uses, we can control the swap fees on the liquidity pool from the DEX itself, independently of all other liquidity pools. So just on that pool, we can adjust. Okay, let's say the swap fees are we want to have it a little bit higher now or lesser now. That can be adjusted. It's called a dynamic swap fee. So essentially, the answer to the question would be the fees are handled by the swap fees on the DEX itself.
Okay, and is that just specifically for the C tokens, like C gold, C silver, C diamond, etc.?
The C tokens, I believe CLF as well has a 5.5 buy sell. So that will be the dynamic swap fee, and then I think the C gold tokens is 2.2, maybe a bit less. We might have it much less in the opening. So depending on liquidity, right? The more liquidity you have, the more you benefit from lower fees. So the smaller your liquidity, because you don't want people to take advantage of swing trading too much, and maybe you want to increase the swap fees a little bit, just so that that staves off that a little bit while you grow your liquidity position.
Okay. So the CLF token, you said it's going to be 5% buy, 5% sell. Right off the bat, right?
Yeah, you can. I believe. Yeah, that's in the white paper. Am I remembering that wrong?
Nope.
Yeah, you're good.
I'm just clarifying and reiterating. So for the CLF token, the main ecosystem governance token and staking token and everything, it's 5% buy, 5% sell, and 5% transfer fee from wallet to wallet, right?
Okay, we can. Yeah. Okay, that's a good description. So we can get a little bit technical here, but I don't really want to. But yeah, basically it's just a fee on transfer. So even when you perform a swap, because you're transferring it to the liquidity pool and then back out to someone else, right? That's considered a fee on transfer. So that's why 5.5. buy, sell, very simple. Don't need to have different on either side. Don't have to be too high. And yeah, just simple.
Okay. So that fee on swap automatically takes into effect transfers from, like, if I sent my CLF tokens to Zach, right? If I sent him whatever 5%, like, it'd be just like a sell fee, right?
Yeah.
Okay, cool. And then the C tokens, they don't have any built-in taxes, but you said you guys are thinking 2% both ways
Swap
starting
fee.
out.
Yeah.
And then adjusting it based on how the liquidity grows.
That is correct. Yes, correct.
Okay.
One of the things too, it's important to know, and NP might be able to comment on this as well, but on the DEX, again, the way the fees will work is that, part of those swap fees are going to be part of the revenue stream for collective finance. When you look at the initial C token, C gold position, it'll be an entire basically protocol and liquidity position, right? So those fees that come in, they don't actually get paid in individual tokens. They get paid in VPTs or liquidity tokens, right? So what does that mean? It means that there's perpetual or ongoing growth in our liquidity position, right? So again, that's super important. It provides ongoing growth and yield by design.
Okay. Interesting. So those swap fees from the DEX, which are adjustable, those are going to be part of the revenue that goes back to collective finance that feeds the treasury, the vault, the portfolio, as well as pays out rewards to stakers and NFT.
Yeah, so part of the
NFT
rewards. Yeah, so part of the rewards a lot of it will be used to give out to participants. Some of it will be used to compound back to grow the position itself. We obviously want to have slow, steady growth throughout time. And then some may be taken just as a treasury fee, just for the treasury itself.
Okay, good to know. And the docs are very thorough. The documentation, check this out if you guys want to see how all of this breaks down, the distribution of the revenue and everything for each of the vault, the treasury, and the portfolio. And the infographics you guys have are excellent, by the way. You don't see infographics like this every day. So I do appreciate these infographics. And so I guess before we jump into like your other revenue streams and how you have these three entities structured, is the CLF token inflationary? Because you said it was a reward token. And is there a max cap on the supply, or is it an elastic supply? How does that break down with the CLF token? Is it an inflationary token?
So yes and no, because it has a max supply of 10,000, though it will be distributing 50% of the supply over 3 years as rewards for stakers and lockers within XCLF. As well, part of the tokenomics will also be going to the treasury to help feed and grow the position itself. But yeah.
Okay.
It's 10 million, so not 10,000, 10,000,000.
Oh, yeah. Whoops. Yeah.
Okay. Good catch. Yeah, I didn't even catch it. So the CLF token has a max cap of 10 million tokens, and 50% of them are locked up right off the bat. So 5 million CLF tokens are locked up for staking rewards over the next 3 years, correct?
So we can talk about this particular point a little bit because it's quite interesting. I think a lot of ways that protocols handle staking rewards is they mint out all the tokens first, they put it in the contract, and then the contract distributes it over a certain amount of time. Yeah. In our case, we actually gave the contract the role of the operator, which means it has the ability to mint on the fly the tokens that are necessary for rewards. So what this does is it doesn't inflate the market cap of the CLF token in the beginning. Because sometimes if you mint out everything, the max supply, even if you put it in contracts and stuff, then the market cap that is read for that token is some insane number, which just creates another barrier for people doing research on the project.
Absolutely. And somebody made one of my friends, you guys probably know Cyril out here. He, as like a fun thing on New Year's, created the YaBonks token, and it had a market cap of like $1 billion. And for like a moment in time, I was a billionaire on paper. It was very confusing for me. I don't.
DeFi is crazy. One second you're a millionaire, one second you're a billionaire.
Yeah, but like NP said, like it makes it hard to understand what's going on. I had no idea what that was, why it was like that. It was super confusing to me. So you guys are saying that this is all going to be handled by a contract that's going to distribute this stuff and mint it in a way that's going to keep the market cap more accurately representative of the state of this project, right?
Yeah, that's exactly right. Correct.
Okay, cool, man. That makes a lot of sense. All right, so 50%, 5 million CLF tokens going to be for staking rewards over 3 years. So after year 3, that's the big mystery to me here. What happens after year 3? What next?
CLF will be a governance token essentially, or that'll be one of its main utilities, as well as, other things. We do have plans for future utility, gamification, things like that. So there will be more additions built over the course of the 3 years. Obviously, that's a long time for us to, think about different ways that we can utilize the token more. But currently, you could see it as it will be the governance token essentially after the course of 3 years.
I think one of the things, obviously, there'll be continued governance for XCLF holders, but the idea behind collective finance is really to guide participants to our lock staking program, right? To earn the yield and the growth that way. So actually, if you think about potentially what could happen after the emissions, if you're encouraging continued locking, that's going to decrease circulating supply even more, right? So again, probably potentially very good for price action. So once those emissions stop, it's not going to change our protocol or the vision. It'll actually help probably support the price of CLF.
Okay, that's a really good point. So once the locked staking rewards stop being emitted, then it essentially becomes does it become deflationary at some point? Is there any mechanism in here that burns it? Or 10 million tokens isn't a lot. Like there are only 21 million Bitcoin out there. So 10 million is actually a really low cap for a token. After the emissions run out after 3 years, does this just stay that amount out there forever? Or is there any kind of burning or deflation going on?
There is a little bit of some deflationary mechanisms that we actually have built in based off of when you're coming in and out of the staking platform and such. And then I think, as maybe Chrome had mentioned before too, there's additional use cases that really involve around a deflationary aspect of CLF that we just haven't talked about a lot yet. So yeah, the idea will be that number would go down. It's not going to obviously go up anymore.
All right, good to know. So do you want to then dive into what you were just saying? Do you want to touch on that?
Yeah, absolutely. And when you say, just so I understand, Alex, you mean the lock staking program that we have at XCLS?
Yeah. So you said we'll dive into the lock staking here. I think we should get right into that, because I think that is really where this kind of sets itself apart from, obviously you guys got the cool Vertek liquidity management system and all that, but this allows you, the locked staking system you have with XCLF and the NFTs allow you to earn yield on your position in the protocol. So do you guys want to kind of break that down for me?
Yes, for sure. And not only that, but I think towards the end of it, we'll let MP comment about we've figured out a way to take a locked position and make it liquid and have a market of its own, which is pretty unique. So the idea about our lock staking platform is that the idea that you can earn multi-layer yield. So it really starts at the base level when you take the CLF token and you're going to pair it with BTCB, like we talked about, and then you're going to create liquidity, right? So that's sort of the base layer of yield. You're then able to take that liquidity position. You're able to stake it on Vertek. That is going to be sort of your second layer of yield there. So that's going to be dual emissions, where you would receive CLF and actually VRTK, so the DEX token. Now is really when collective finance comes into play, because you're going to be able to take what's called that gauge receipt, or the receipt from your staked position, and you're going to be able to lock stake that on our collective finance platform. And you're going to be able to put that into one of 4 different tiers that's time-based. So 30, 60, 90, or 180 days. And the rewards are broken down and staggered to the point where the longer lock periods receive a higher percentage of these rewards. So what are these rewards exactly? They're going to be multiple in nature. So there will be CLF, the native token. There will be CGLD, and not only C Gold, but also the other C tokens when they're available. There'll also be a stable coin portion, and likely Bitcoin as well. So the idea behind this is that we give participants all the rewards that they're able to move forward in whatever fashion they see best fit. If they want to take profit, they can do so healthy. If they want to increase liquidity positions, they can do so on the commodity side or on the native token side, right? So it really feeds back into itself. I think, if it's okay now too, if NP can comment, the traditional locked position that you'd have in a 30, 60, 90-day tier, we've sort of found a way around that. And NP, you can probably articulate this much better than I can.
Right. So the locked stakes, technically speaking, they are going to be NFTs. Now, I'm not talking about just the JPEG kind of NFTs, or I mean, there'll be an image attached to it. But the lock stakes, every time you perform a lock, it creates a NFT, and then all of the data about the stake is stored inside the NFT. So what that allows us to do, because NFTs are transferable, you can actually transfer the stake from one person to another. And then obviously these, because it's an ERC 721A, you can list them on NFT marketplaces. It will be on OpenSea at the beginning. Then when Vertex's own NFT marketplace goes live, the collection will be listed there as well. So what this will create, we foresee, is a secondary market for the lock stake positions. So the thing about this is that the first thing is that it allows people to take profit without dumping the token, because you can so-called flip your position or for a profit if somebody else buys it on an NFT marketplace. Secondly, all of these locked positions are yield generating, because the moment it gets transferred to someone else, they are eligible for the continuation of the rewards that are getting dripped through the lock staking platform. So it'll be interesting to see what the market decides and how the speculation goes for each of the lock stakes. For example, if let's say you lock your stuff up for 90 days and maybe you got about 20 days left, and you have a large position and the price has been appreciating because Bitcoin maybe mooned or something, right? So you kind of want to take profit, and you do so by listing that NFT on the marketplace. You can demand a higher premium than what you paid for your original stake, and all the whole time since the 90 days has been counting down, you've been getting all the rewards. Then you sell your stake for X amount, and people may look at it and say, okay, it's a 90-day stake, so it's getting a large portion of the rewards. And at the same time, it's unlocking in a short amount of time. So it's like having a shorter stake, but capturing a larger portion of the rewards. So then somebody buys it, and then you get to profit, and they get to take that lower risk but higher rewarding lock stake. Then also this also protects the overall liquidity of the entire project, because all of this profit taking going between people doesn't have to sell token. So it's all lock stakes and NFTs being transferred from one person to another, and the value comes from the innate yield generation. So that's another thing that we built in there, and I think we're actually quite excited to bring that to market, to be honest.
That
Yeah.
that is cool, and I like that option more so than just like the emergency exit option, which is great you have that, by the way. I think that's excellent that you have a way for people who are in a liquidity bind, who their car broke down or something. They need their capital, and that's where the only place they can take it from. They can at least emergency exit, get, take a haircut, but they can get their capital back and go about their day. This is even better because if you have a NFT marketplace, this is almost like a secondary derivatives market, right? It's like a derivative of CLF. So you've created a derivatives market, which also, you're going to have the futures and leverage trading. That's another derivatives market that you're going to have available through Vertek. But this one is like based on NFTs and based on your locked stake positions, which is a multivariable, right? So like you said, if based on how many days are left in the stake, based on the prices of Bitcoin and CLF, based on how many rewards that that position is collecting, and based on how much capital becomes unlocked in X amount of days, you can price it accordingly to the supply and demand of the market for that derivative product, that NFT. I think that's really a cool idea and creates a whole nother level of gamification and options for participants here, who, especially when people are locked up. When people are locked up, like, it can be unnerving at times, right? Obviously, you're giving up some level of control to allow the project to manage your capital for you in a way that might suit the entire ecosystem best and hopefully benefit you greatly because you've taken that risk and they pay you back for it with interest, if you will, right? The interest being the rewards and all the other stuff. But in this case, you have options. It's not just like you're locked in, you have no options. You have the courtesy of an emergency exit, which a lot of projects don't even give you that. So that's good. You got a way to bail if you need to. But then even better, you got a secondary derivatives market where you could actually find options and sell those options to other people in a way to make yourself additional capital appreciation, as well as find liquidity to exit your locked staked position if you really needed to, and potentially at a way where you don't take a loss, or if you do, it's very minimal, or you might even make some gains on it as you leave your position. So I think that's really cool, you guys. What do you think about all that?
This is where we're as excited as like you could be. We think this is absolute game changer. Honestly, it sort of makes that emergency exit program obsolete, right? Because the one thing you have to remember, the intrinsic value that NP talked about, right? You have the value of the liquidity position that's locked within there, and then you also have the yield that's going to be generated, right? So if somebody needs to get out, there's going to be, the treasury will always be buying, right? Because basically, potentially the treasury can be buying our own liquidity that's yield generating at a discount, right? Which is an unbelievable thing when you think about it. So, hey, look, I need to get out of my position. I got to pay my mortgage, whatever's happening, right? So I could go the emergency exit and it like just would have given me a haircut, like you said. Alternatively, right? Who's going to start buying your position when you give it 5 cents on the dollar discount, 10 cents on the dollar discount, right? The treasury's always going to be looking for those deals, assuming there's capital. So it's really a unique thing, and it's going to drive more people. The locking part will be much more palatable, as you discussed, and collective finance is built around that lock staking. So if we can get more participants to be willing to engage in that part of the protocol, it's better for everybody.
Awesome. And the NFTs, the lock staking rewards, there are 4 different rewards. They're going to be getting rewards from the Vault, C Gold, and potentially the other C tokens as those get rolled out. CLF, the main protocol token from the treasury, and USDC from the portfolio. And so just sitting in here in the CLF NFT, you're going to be getting all that stuff. So basically, if I'm sitting in this position, I'm getting stables, I'm getting gold, basically, on the blockchain, fully over collateralized, and then that over collateralization is then 1-to-1 backed in actual audited vaults in the real world. So it's kind of interesting. This is like you're taking Pax G and then like bumping it up on, steroids, giving it 10% extra juice to protect it in case anything were to happen. And then, like, I guess your custodial risk as a participant here would be the blockchain itself, exploits and things like that. It would be a technical risk exposure for your custodial risk on top of whatever custodial risk you take if you hold PAX-G, right? So if you believe in Ethereum network and Binance Smart Chain and your smart contracts that you guys are using to kind of manage that collateralization, then that's basically the additional risk that you take on for that additional 10% collateralization, which, if you're getting C gold for free, essentially just for staking, I think that's a pretty cool deal right there. Did I explain that right? Did I say anything incorrect there? Do you guys know?
No, I think it was pretty good. I just wanted to add that, I think everything in DeFi is an experiment, and you should always be very careful with what you're doing. But us as a team, we've taken every step to ensure, true safety and security in every way that we possibly can from our end itself. Yeah.
Right. And like I said at the beginning, I've known you guys for better part of a year out here, which is a long time in DeFi. I know your reputations before I even met you guys then, and you guys all are, I think, highly esteemed players in the DeFi space, and I think highly of each of you. So I don't have personally, now everybody do your own research, stay super vigilant, obviously, but I don't have any real trust issues with you guys. I don't think you guys would actively try to screw me over or steal from me or anything like that. That's my opinion based on my personal relationships with you guys. Don't prove me wrong. All right.
No, I'm glad you brought this up. This is a really important thing, right? So we talk about integrity, transparency, like that's paramount. And we're all really good friends and we're all really close and we believe in each other and we have each other's back, right? But it's really important for people to understand we have real lives too. Myself and Cripsom, we have wives, we have children, we all have other. So for us to put ourselves out there like this, we believe in what we're doing and we believe in the people that we're doing it with, right? So that's really, really important. And we wouldn't jeopardize our own lives if we didn't believe in what we're doing, right? So it's really important, I think, that people know that.
Yeah, I'd like to touch on that too, because I mean, there is days where you'll catch, maybe part of the team because the other part of the team might still be grinding during the day. I mean, like we've mentioned before, we've got families and businesses, multiple different businesses between the founders that we run. And, it's entrepreneurs, that's pretty common. That's very common in my opinion. A lot of my friends are entrepreneurs and they have multiple different businesses going as well. So yeah.
Yeah. And it's a breath of fresh air to see DeFi project owners and founders and operators putting themselves out there, putting their faces out there, and, taking that risk for the benefit of the participants of their projects. Because I think as traditional business owners and entrepreneurs in the real world, that's what we're used to, right? If I'm investing in a small business or some startup, you bet I know who the founder is and the CEO and who's managing, which, like, I know their faces. I could talk to them. They are real people. I know probably where they live, right? They're probably publicly, you could look them up and everything like that. And that's a risk I took with this influencer DeFi business where I'm running a TV show interviewing entrepreneurs and software developers like yourselves. So, like, I appreciate and I respect that you guys took that head on for the benefit of your project's participants. It's a courtesy and you take on a lot of risk and you take heat, because even if you don't do anything nefarious, like nobody knows how a project's going to do based on a million different factors, including luck and the macro environment of the market. Nobody knows, right? So like if price goes down, send hate messages. If price goes up, send Lambo and moon gifts, right? That's how it goes out
win
here.
Lambo.
So like when times are good, everybody's happy, but when times are not so good, even if it's at no fault of any person, or heck, even if it is mismanagement or incompetence running a business, that's still nothing nefarious or malicious. And that's just like in the real world. You invest in a startup. Hopefully you're investing in people who are running those projects and businesses, because those people are going to be driving it. But again, they can't control every single factor, including luck or human psychology and macro environment. So, I just like a project where the founders put themselves out there and say, hey, this is just like we're starting a business or a project in the real world. You can see us, you could talk to us. This is who we are. I'm not talking to a GIF or a picture of a whatever, like a pixelated doodad or what have you. You know what I'm saying? It's you guys are good people. It is comforting, and you guys are people I know. I consider you all friends at this point. So like you're on my short list of projects that I would feel comfortable playing around in DeFi and seeing what happens, because I think you guys will run a fair game out here. You're not going to pull the table out from underneath me. I don't think so, at least. I always have to give disclaimers, even no matter what, right? Because that's the risk I take being out here publicly. Because if that does happen in any sense, death threats, hate messages come at me. But if you guys do great, Moon Lambo gifts with YaBonks drawn into them. Like, that's how it works for influencers. And anyway, I appreciate what you guys are doing, putting yourselves out here like this.
Thank you, man. We appreciate you too, for sure.
And especially, hey, NP, especially you, bro. I know you've been out here a while. You've been nervous about, doxing yourself and everything like that. And it's nice seeing you out here, like, comfortable publicly talking and sharing your ideas with your face instead of the lizard picture.
The gecko.
Yeah.
A lot of people know me for that though, so that's just that. But yeah, it's fun. It's good to be able to connect. It's kind of just like a video call, right, from across the earth. So yeah. Right.
And that's that's something you guys all know I require for anybody who comes onto my channel. I've got a video chat with them before they come on my channel, and I talk to them about everything that I can think of, and I try to get a feel for them as a person. And I've video chatted with all of you guys multiple times before this, and that's a privilege I get that normal DeFi participants don't get. They don't usually get to video chat with the anon devs running their projects, but sometimes I get to video chat with those people, and I get to know who they are behind the scenes and form my own opinions on them. And so that's why I try to implement that before anyone comes on my show. I at least have to video chat with them privately. So like NP, you've been on my show multiple times now, but like we've been video chatting as friends for a year, right? So like, I don't care if you come on my channel with the gecko picture or your face like this. It doesn't matter. I feel like I know you pretty well and can represent that to my audience, right? But now that you're out here like fully doxed or whatever, it's like, hey, what's up, bro? Now everybody can know you how I know you, right? So it's nice.
Yeah.
And he's kind of buff.
Yeah.
Hey.
Did you guys? Yeah. Did you guys know that NP's jacked?
Checking me out.
Yeah, man.
Oh my God.
Yeah, man. Who knew? Dude, there's so many people out here in DeFi that are just like jacked. It's crazy. I need to be lifting weights more. I got the weights right here. I just don't touch them. So I got to get back to it. I want to get jack like NP out here. So
30 minutes every day, man.
30 minutes every day. Man, I used to be in fantastic shape, and then DeFi happened. And I started working 20 hours a day and not sleeping. I'm like, I'm too tired for that. No. So, all right. While we're on the subject of you guys as a team, let's talk about accountability, because that's so big. It's all part of this. So you guys are KYC'd by Assure DeFi.
So yeah, I want to just say a quick word about Assure DeFi. They have been absolutely fantastic. They are pros over there. Chapo, their leader, is one of our advisors. So just hat tip to Assure DeFi. If anybody's looking for KYC and that type of thing, they're amazing.
Good to know. And yeah, feel free to introduce me to Chapo. I haven't met him yet. He's one of the KYC companies that I am not on a personal basis with yet, and I would like to meet them because I think they do great KYCs. Actually, one of the things I really like about them is this tier system here, where it says country tier 111, and you guys have country tier 1 number verified, 4 of you guys. And for those who haven't looked at a lot of KYCs like I have, the country tier basically means what level of accountability an individual has if they do something wrong, like financial fraud or theft in their country, right? Tier 1 is highest level of accountability. They are sending the police to your door. They're kicking in the door and they're dragging you to prison, right? That's like tier 1. Like you steal in a tier 1 country, the popos are coming after you. And at least the SEC is coming to, and you're probably going to get fined, sued, or imprisoned if you steal in the tier 1 country. Tier 2 country, it's a little harder. Tier 3 country, really hard to go after people. And they actually even have footnotes here. Add like a tier 1, strong law enforcement with resources and capabilities to effectively legislate and pursue crypto-related cybercrimes. Then we'll jump straight to tier 3, the lowest level of accountability. Law enforcement and legislative resources severely lacking, in most cases would prove ineffective at pursuing crypto-related cybercrime. So, it's so nice that Assure does this for me, because one of my due diligence questions is, who else is on the team and what countries are everybody from? And people are like, why do you care what country? This is why. I want to know what country they're in. So if they were to rug pull or like steal the money, embezzle the funds somehow, I know that there's some avenue for legal recourse for me and the other people, right? Tier 1 countries are excellent. What countries are all of you guys from?
I'm from Canada.
Singapore.
Doc and I are from the States, United States.
Those are all tier 1 countries, and that's great for me to know, because if I'm going in this project, I know that these guys, if they were to F around, they would find out, right? And that in like a serious manner, not by vigilantes, but by big government, right? The government would come bringing down the pain, and that's not a risk I think any of these guys would take personally, because if you do that, you basically become a fugitive on the lam forever, right? Until time is served or whatever. So that's why when you have a combo like this, a good KYC that even shows you the tier of their country and the level of accountability in their country, and then you have them fully doxxed on camera talking to us, they're serious, and they're out here taking a really big risk, especially in terms of like legal aspects. So in terms of financial fraud, embezzlement, theft, rug pulls, it's very unlikely, statistically speaking, with this setup, this combo, that something like that would happen. Does it still happen from time to time? Absolutely. Just coming from traditional finance, I'm signed up for these things called offshorealerts.com newsletter. I get every day, I get updates on who the SEC is pegging. Pow, 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 pow. and they're going after these people all over the world, right? And they are getting serious jail time for stealing and running different schemes and things like that in traditional finance, in the banking world, in traditional business and things like that. That's not even crypto world. So in traditional finance, there are sociopaths out there who can get on camera, look you in the eyes, and say, "Hey, we're all gravy." But that's very, very low. It's like 2% of the population, and usually you can make your own judgment for that on a case-by-case basis. Now, with all that being said, I think this is an excellent KYC you've got, and I think it's excellent that you guys have publicly doxed, coming out here on camera with your names and faces, running this as legit and publicly as possible. So do you guys agree with what I said, or do you disagree?
No,
Yeah,
I totally agree.
Yeah, I wanted to add that it's very easy, especially for, we've seen this in a lot of other projects, to just get a KYC by itself. It's very easy to do that, and you can hire actors. You can, hire somebody from Nigeria, somebody in Africa, somebody like that. We've seen this done in the past. So being able to actually show the KYC as well as dox yourself really does show the transparency and commitment, because our faces, our names, our location, and our actual information is all verifiable right there. If something were to happen, we are truly able to be held accountable. If it were just a KYC by itself, you're still swimming in gray water right there.
For sure. And that's why I do those pre-screening calls, because after 5 or 10 minutes, I can tell if somebody's a paid actor or not. It's real clear if they know what they're talking about with the project and with the macro environment of crypto and DeFi and who the players are out here. And I could tell in 5 minutes or so if I'm talking to a plant or somebody who something's just off. They're aloof. I'm like, this isn't the same person I was DMing with that set this whole thing up. Like, something's not right. I back out, right? So they do that to try to get onto YouTube channels as well. But it's the same kind of thing where I talk to these other people running KYC companies out here. I'm good friends with many KYC company founders, and they tell me they get the same thing where, like you said, they hire somebody from wherever to act like them and pretend to be them and show their passport or a fake passport on screen with them with like a Photoshop picture on it. And it's tricky. I mean, it is super tricky. But like I said, if I'm talking to somebody like you guys for an hour straight, just shooting the breeze, and I'm just like, tell me about yourself. Tell me about your project. What do you think of this person? What do you think of that project? And we're just talking. I could tell real quick if you're trying to BS me and you're not who you say you are. And then also, if I hear that you have a different voice than what I've heard on the other KYCs or the other AMAs with other people, you've got a different voice. I'm like, what is going on? So yeah, you're absolutely right. A KYC alone, I don't think is good enough. For me, personally. This is DeFi. Everybody has their own opinion. Some people are like, oh, that breaks the whole DeFi philosophy, but I don't think it does. If I'm giving anybody my money, my capital to steward, I better know that there's some level of accountability, that they're just not going to be like, oh, thanks, YaBonks, sucker. As they ride off into the sunset. Like, so no, I think, Jake, that's a great point you made about a KYC not being enough. When you got the KYC, when you got the people on camera and they know what they're talking about, they are who they say they are with the project, then you know you got a solid combo, in my opinion, of a team with accountability. Now, with that being said, it says here that Monkey, that's Chrome down below, you have control over the treasury, liquidity, and contract. Zach, which is Crypsom, you have control over the treasury, liquidity, and contract. The Great Varney, Gold Doc Brian, has control over the treasury and contract, and Jules, aka NP, down here has control of the treasury and contract as well. Now, does that mean you guys are all on the multi-sigs for these things?
Yeah, so there was a slight mishap when we were all filling it out. We all have control over everything because everything is set under Gnosis Safe multi-sigs, right? So all four of us are all the owner keys on the multi-sigs, and multi-sig is what owns everything. So we have control over treasury liquidity contracts. All four
Great
of
to
us.
know. Thank you for clarifying that. That's a great piece of information. And it really simplifies my next set of questions. So okay, there's one multi-sig for the treasury, for the liquidity, and all the smart contracts. Okay, that's fantastic to know. So that's great. I think that's basically best practice. In terms of best practice, you guys, not many people do this, but do you guys have any kind of like time lock for changes on your smart contracts or anything like that?
NP, you probably know about it.
So I'll take this one. By changes, you mean if we change anything on the smart contract? Is that correct?
Yeah. So it's like it's not a commonly asked thing, but like if you do like a CerTic audit, like they'll recommend a time lock if you change a state variable in the contract, or if you swap out the proxy contract or something like that. Like you have a 72-hour window where it emits an alert,
an event on the blockchain. Yeah,
on the blockchain. Yeah. People watching that can say, "Oh snap! They're doing something they didn't tell us about," and then they bail. They got 72 hours to like make a decision before the change gets implemented, and that's like how the time lock's supposed to work. So, not many people do it though, but I gotta ask.
So that's only for upgradable proxy contracts. All of our contracts don't use upgradable proxies. So once they are deployed in the blockchain, they're set in stone. And they're immutable. That doesn't sound as dangerous as that doesn't sound. I mean, that's not as dangerous as it sounds, because actually what that means is that we can't just randomly change the code to something else different from what the audit was. So we have been audited as well. I think you're probably going to go through that in a while. And then they did have some suggestions which we did implement, and then we sent it back again to confirm. Then only we deployed.
Okay, good to know. And yeah, you make a great point about the upgradable proxy contracts, where I have seen many rug pulls where they just like swap out the proxy contract and it's like a whole new thing. You don't even know what's going on, and they could just do it anytime and change all the code and swap it out with something with like a piece of rug code in it. With how you just said, you guys are using verified static smart contract code, immutable, like you said. You can't change the code once they're deployed. All you can do is change the state variables in the right portion of the contract API. If you're looking on like BSC scan, right?
Yeah, I think an important point to note also is that these upgradable proxies it's not uncommon in DeFi to have that. And the reason for that is sometimes you want the flexibility to change something. You know, maybe a new technology comes out you want to implement, or you know, there's value to being able to upgrade stuff. And the flip side of that is that you know, you don't want things to change too much, right? So and you don't want to give too much power to the centralized entity who's holding it. So it's a fine balance to or fine line to walk between the reefs of bones on both sides.
I totally agree with you. I think there are pros and cons to both sides, and it all comes down to, do you trust the team, right? Like, if I trust the team, I am totally cool with them having an upgradable proxy contract, because things change. Maybe they find a bug and they want to roll out a improved version, right? If I trust the team, I trust that they're going to do that with my best interests in mind. So that's, in those cases, it's not an issue for me. But it's great we've had this conversation. It's very educational for people who don't understand how that stuff works yet, and then they can kind of better understand if they're looking at a smart contract and it says like proxy, and they're like, what does this mean? And by the way, who are these people on the team? Random people. They might think twice, right? But if they're in a project that they know the team, they're comfortable with the team, and they see a proxy contract, they're like, oh, that means they can upgrade the code base if they need to, if they want to, you know, fix bugs or make some upgrades, right? So I like that convo. I think it's always good to reiterate that stuff. Now, you guys do have the audit here. Give me 1 second. I want to bring your faces back up. So who did you guys go with for the audit?
We got recommended by from Assure DeFi Chapo to go with I think it's CDT SEC or maybe it's CDT. I keep mixing up the two letters, but yeah, it was recommended by Assure DeFi to go with them for the audit, and then we completed 3 of the 4 contract audits before actually opening the pre-sale. The last one to be completed is the staking contract. And so that's the one for XCLF, with the NFTs and everything like that.
Okay. And they're...
that's CTD SEC. CTD SEC.
CTD SEC. Okay.
.com. Yep.
.com. All right. And they found no high severity issues, which is good. Mostly medium, low, and informational issues. And you guys said you responded to the medium severity issues, like the integer overflow and underflow. You fixed that. Everything else passed. And the overpowered function and owner privileges that they thought you had, you fixed that as well. So
if you scroll up, actually, you can see where I think it's on 2.0 or something. It'll show the previous contracts, which had the the super small little fixes, and then the fixed versions below. So the contracts that are the fixed versions are the ones that are deployed, fully audited, and the active ones.
Very cool. All right, good to know. So if anybody is interested in reading smart contract audits, I have read a million of them at this point. They're super straightforward and really easy to understand. You don't need to understand how all this stuff works. Basically, you just want to see if it's critical or high severity. You might want to look into if it's medium, low. You can peer into it. But if they fixed it too, and the audit company came back and said your fix is all good, then everything's usually pretty squared away. So you guys fixed all this stuff. They've got all the details here, shows how you fixed it. Looks like a pretty solid audit. They got the automated testing as well for reentrancy stuff and gas optimization, all the typical stuff. So seems like a solid audit. My first time hearing of this audit company, but that is good to know. If Chapo from Assure DeFi, then that's a good reference in my opinion. So cool. All right. Now, who developed your smart contracts?
So we came up with the concept for all the what it needs to do together, and then I kind of talked to a few different devs to help me write the smart contract. And so ultimately, I was the deployer for the contracts that you see there on the audit. But
Okay.
yeah, I got a lot of help from some people that are actually quite well known in the space. Again, I don't wish to name drop, but maybe someone else might.
Yeah, I think it's actually pretty good to name drop that one of our main advisors, advisor dev, would be LB from Great Finance and Vinium. So he's kind of a guy that we can go to for oversight and to just check our contracts and everything to make sure, hey, how does this look? Can we optimize this? Is there any security issues, stuff like that?
Absolutely. And for anybody who is newer to the space or might not know a lot of the players behind the scenes, LB is one of the major developers behind the scenes that goes out of his way to help people. So he has an excellent and a stellar reputation. I've video chatted with him and I've talked to him for a long time out here. So I've worked with him for about a year now, and all the projects that I work with say, hey, when we have trouble with a technical issue, we reach out and we ask LB for help, and he helps us for free. He helps people freely out here just because he loves DeFi and being a part of this whole thing. So LB's an excellent developer. I've seen his work, and he goes out of his way. I don't know how he has the time. I bet he has to have a team or something, because I don't know how he helps so many people and so many projects like he does. It's kind of mind blowing, but no, he's got a stellar reputation, and I just want to put that out there for anybody new watching who's not out here in Discord every day like me. who doesn't know who LB is, he seems like a very solid dude in my opinion. So take that all with a grain of salt, whatever, because I'm just little old YaBonks over here. But no, that's super cool that LB helped you guys with your contracts. That's a vote of confidence, in my opinion, knowing what I know about people in the space.
Yeah, I would say I've been friends with LB for quite a while now. He's kind of traveling around right now. I think he's in Romania or something. He was sending me photos just a minute ago. I was about a couple hours ago, I should say. But I was just kind of talking to him about some things that we're working through on the back end too. So, great guy. Like you said, he's been around a long time. I've been with him since Great Finance was like just starting. And one of our angel investors and a close friend of mine, he got me into that protocol when it first started to kick off. So, and I mean, like back when, the shares were, under, I think it was like 30 or $50, and then they ran up to like 400 or something, or close to 400. So yeah, it was a good run there, but, I've known him since then, and he's always been helpful. And I've just slowly, in the last several years, been building the network, and he is a key piece to the network, along with
Definitely.
Everybody else here, I believe, besides myself. I think everybody here is part of that macro network. I just try to bring it together.
Too. Yeah, don't try to be modest.
Well, anyways, I really think that it's important to drive home to the network that we have. I talk about it all the time.
Yeah.
And it's because I'm starting to myself see it come into fruition incredibly, especially over the last month. So things are moving along well, and I'm super happy to have him on the team and some of the other folks that are in the background that not a lot of people know about yet, but we do have some good networks, or a good network.
Well said. Yeah, I totally agree. The network that we are all building out here of what I call the good actors in DeFi is superb. Really, just high quality people. I'm talking like moral fiber, very high. Intelligence, very high. Community building skills, really high. Like everybody brings something to the table in this network that's like grown out here. And even if what they're bringing to the table is they're just a decent person that loves DeFi, like that, to me, that's super valuable, right? We need enthusiastic people out here that don't want to screw people over, right? That want to actually help build and help people all come up together. And we've got like a super tight knit network. And that's what, like, my channel's kind of funny. It's like a filter, like a sieve, if you will, where like there's like all these fucking, excuse my language, plankton, just like plow, hit my sieve, right? And I just got to like look through, like, who are you? No, who are you? All right, you can come in. All right. And like,
you're like a bouncer.
It's so weird, man. My position's so strange. I meet so many characters out here, and so many characters approach me, but they won't meet me. They will not. As soon as I say, hey, okay, will you get on video call with me? They're just like, excuse, disappear. And then 2 weeks later, rug pull, right? Like, not always, but I've seen it happen numerous times. And it's kind of interesting. The ones that do come on my channel are usually all part of that network that you were just talking about, where behind the scenes, people know them. They're out here helping people out, building stuff. Some new people come out onto the scene through my show and whatever, and it's interesting. Like, I plug them into that network. I'm like, you need to meet this person, and you need to meet this person, and this person. And it's a really good system because it pushes out. As soon as somebody like shows their true colors as like a nefarious person, where they're like stealing money or like screwing people over somehow, it propagates through that network quick, and they get pushed out, and you don't hear from them again, or they try to come in with a different name, profile picture and everything.
Yeah.
But like you're like, wait, you're that person again, aren't you? I could tell. Like you could tell when you talk.
The same habits.
Yeah. Like you're that guy. Get out of here. Anyway, so I could talk about that all day. We could do a whole episode just about how cool this network that's been building during the bear market, where it's like the hardcore, the Spartans, if you will. Hey, speaking of Spartans, I got Spartans on my silver right there.
Oh yeah.
Leonidas and the
There we go.
300. Molon Labe, come and take it. We are the DeFi Spartans building in the bear market. When people say it's dead, it's not. It's more alive than ever. And when that bull market capital, that TVL flows back in, man, let the good times soar. You know?
That's right. Let the good times roll, baby.
Let the good times roll. So, all right, with all that being said, that's awesome that LB helped you guys with your smart contracts. And NP, I know you are an excellent manager of developers, and I know you got a solid team of developers that you work with as well. So that's good to know. And let's see. And
don't short NP here, because like he's secretly the ninja coder in the background. Yeah. Like, you know, he's the one jamming. You know, I just always think about like just the keyboard's on fire and he's just sitting there just jamming, you know.
He definitely is a big help.
You might also know him as Chat GPT-4.
That's right. Yeah.
That's what I'm like, MP, is that you? That's you, isn't it?
Am I talking? That's funny.
I've learned a lot across the last year. So I didn't have any coding experience. Obviously, it was not from that background before DeFi. Then just from working with devs a lot, I picked up quite a bit. So it really helps me when I interact, especially when you need to bridge the gap between the idea and the code. So that's always quite difficult to do if you don't really have an understanding of what's possible and what not possible.
So one of the funny things, little joke with us all the time, I'll have all these ideas, these big ideas. I get real excited, and NP is so gentle, and he's like, yeah, doc, good idea, but not so easy to do, right? Might take a little time. So, he's a dose of reality for us sometimes when it comes to linking sort of the ideas to the code and making it go. So.
I can relate to that as a software engineer and developer. I learned that ideas are a dime a dozen, and it's implementation that counts. If so many people are like, I got the best idea for a phone app, man. If you just develop it, I'll go 50-50 on it with you. I came up with the idea, right? And I'm just like, all right, well, here's my hourly rate, $75 an hour, and it's probably going to take 800 hours total. So let me know when you want me to start billing you, and I'll start building that right away. And they're just like, what? I'm out of here, man. No way. And then their idea obviously never gets implemented because they aren't willing to pay for it or learn how to do it themselves. Right. So MP, I can relate, man. Yeah. All right. So now that we've covered the audits and the contracts, I got a few other risk vectors I want to cover for the overall project. And then I want to kind of jump back into the best strategies. So first off, do you guys think this project would be able to survive if any of the team members were to leave the project, or if something were to happen to them? Would the project still be able to continue?
Yeah, for sure. And we've actually had this discussion, right? So what happens if somebody ends up in the hospital? What ends up, that type of thing. So and actually, again, going back to Chapo and our advisors, we've had some good guidance on this. So we've put some redundancy safety factors into place, I would say.
Okay, good. So you have some continuity plans, and then also you have some logistics in place for transferring the multi-sig over to a new person, or to just shrinking it to the smaller group, right?
Yeah.
Yes.
Not only the multi-sig, but the code, all the stuff that we need to, so that it's not reliant on one single person, right? That chain.
Yeah, absolutely. No, that's great. That's the nice thing about having a larger team like that, the continuity plans are a little easier to implement than a one-man army type project, which I run into all the time, and they usually haven't thought about it yet, and that's good you guys have thought about that, because life happens sometimes, and if I'm sticking my capital here for 3+ years, I hope that things will continue operating smoothly, no matter what happens to any individual, good or bad. Somebody might leave to go take a job somewhere or something, right? You never know. So, speaking of continuity, do you think that the project would survive if this bear market continues for years longer?
Yeah, absolutely. I think one of the special things about the project and how we've designed this is exponential growth over time without the need of new participants or a bull market or anything like that. We have, we thought about this very in depth before getting into it. We didn't want it to have any Ponzi-nomic type mechanisms or anything like that, where you need new capital or you need new investors. It's set up to be sustainable and to continue to grow itself over time.
Okay, good to know. So, this project would be fine regardless of bear or bull market. And with everything we just talked about there in terms of risk, what do you guys think is the biggest risk to participants in collective finance? Feel free, anybody, to talk if you each want to kind of give what your opinion is on what the biggest risk might be to somebody throwing some money in here. Have at it.
I think for me personally, I see it as a whole economic worldwide situation is what would cause the downfall, essentially. It would take a lot. Obviously, we're backed by gold and Bitcoin, some of the strongest assets right now in the market. So if we seen those plummet, it would obviously be a more worldwide issue itself that would then funnel down to collective finance itself. That's my opinion.
Yeah. If something happened to these two, we're all screwed. Hope you guys were stacking lead the whole time too, if you know what I mean. All right.
Yeah, I would say I agree with Chrome on that one too. It would have to be like sort of a risk. What the risk would be, like some sort of black swan event or a catastrophic event that affects the global markets. Because we're hedged into Bitcoin and gold right now. So I think that's a good point to bring up is if you do see, I guess the potential risk would be gold going to zero, I guess, and Bitcoin falling out. So you do have the on-chain risk of, some crazy event that might happen, but that's why we go through audits and security checks and everything we can imagine to make sure that this can happen from our end. We've checked the boxes. We've put our own money into this, which is really important too to know. We're fully vested. We're here.
Yeah, for me personally, I'm not worried about gold going to zero or any of that type of stuff. It's more about I think we talked about it before, something being hacked, a security breach, that type of thing. And in particular with us, with regard to where we keep our gold, right? So to me, that's the one thing that you need to focus on and be as diligent as possible.
Yeah, I agree. What about you, MP?
I think everybody kind of mentioned all of the points that I had in my head already, but that's black swan events. The nature of black swan events is that you can't really predict that they're coming, so it affects everything the same way that it'll affect the little ones. Sometimes the little projects or the smaller market cap projects get affected more. Sometimes they don't even get affected at all. Sometimes you still see random coins just mooning, even though Bitcoin is dumping 20% in a day. So there's that. I think the larger your market cap grows and the more well distributed your token is, then the more coupled you get with the larger coins like Bitcoin and Ethereum. But for the small market cap coins, sometimes it's quite decoupled. So it really depends on how you manage the community with the overarching market narrative.
Yeah, absolutely. So Yeah, I kind of echo the similar sentiment. Black swan event in any of the markets like gold or Bitcoin, or just like the overall monetary system completely imploding. In that case, everybody, run for the fire exits. But you can't ever see that stuff coming. And when it happens, it's going to be the last thing on our minds. And then the other thing is technical. So, some kind of like unknown exploit on the Ethereum blockchain, or like Binance smart chain, some kind of like EVM based exploit or smart contract, like so you guys have assets on Ethereum as well as on Binance smart chain, right? You guys have your Pax G on Ethereum, you're over collateralized for C gold with Pax G over there. Is that like a bridge? Is there like a bridging process there that could be exploited or anything like that you can think of?
Luckily, no. So everything that we're doing, it's very separate. If there is ever a point that we do need to move capital, it'll be very easy for us to, go through the multi-sig, bridge it over to BSC and use it like that. But there's never going to be a point where it's constantly changing the collateral or shifting the collateral. We want to make sure that it essentially just stays and grows over time.
Okay, so you kind of rebalance things periodically as a team. You say, okay, we got to move over, we got to batch over this amount of Pax G or whatever, or
do you want
Sorry,
go ahead, bro.
I was just going to say it'll be very dependent on the situation, but it's a lot easier for us to burn the C gold tokens to then increase the overall collateralization. That's super, super simple for us to do instead of liquidating the collateralization to bring it over to Binance. It's easier for us to burn the C tokens, more collateral.
Yeah. Okay. So because I know traditionally in DeFi, bridges are one of the most exploited mechanisms, right?
For sure.
So, and
we don't have to bridge. And when you think about that, sorry to interrupt you, Alex, but if we have the Ethereum or the Pax G that's being held on the Ethereum side, right, we will be minting CGLD on the Binance side. So there's nothing that's getting bridged across, right? So, and the idea is to remember that the idea for us, we want to increase the amount of circulating supply of CGLD and the other commodity tokens into circulation, right, that are being used. So, but I think it's important what Chrome said, the minting and or burning, if you want to call it, it's not going to be happening all the time, every transaction, that type of thing. It's going to be more focused and based off of need.
Okay. Yeah. And will that be a fully automated process, or is there some like involvement of team members manually triggering that or minting like a specific amount? Like, is that automated or manual?
Yeah, I would say for right now it's manual, and NP can jump in here if he wants to. But we obviously have a goal, a long-term vision. We talked about, 3 years down the road, not too long ago. I would hope that it, and imagine that by 3-year mark, we're pretty well automated at that point. We're just looking for innovation. So, and to further the protocol. So, decentralized is in the name, that's what we're looking for. So, at some point, I think NP and everybody else could back me up that, that would be the best fit for the long term and longevity.
Yep, definitely for sure. Hit the point right on the head, man.
Okay. And I think the manual way, in terms of looking at it from like anybody like exploiting anything or finding some way, like manually is not, I think it's actually a good thing right now, right? To manually monitor and that minting process and that balancing and that collateralization a couple times a week or however you do it, will be probably totally fine as long as nobody like fat fingers and adds a few extra zeros or something. Have multiple people on multi-sig verified beforehand. But and then if you automate, make sure it's very like cut and dry and somebody can't manipulate that process, for instance, by like spoofing the amount of Pax G that it sees or something, like by like, I don't know, like a flash loan. I don't know how that would work, but like people somehow intercept like a message or communication and spoof it to where it's supposed to go, and then it mints X amount of tokens and yada yada yada. So that's why I'm wondering. So I actually think the manual process is safer in terms of cross-chain stuff right now. Until unless you guys really got a well thought out automated process, which for you guys with all the resources you have in terms of DeFi, I think you'd be fine figuring all that out when you get to that point.
Yeah, definitely.
So, yeah. Cool. All right. So that was my main concern with risk, was bridging assets. Anything cross-chain always freaks me out. But sounds like right off the bat, especially, there should be no concern about that. And then when you guys fully automate it, like that'll be something we'll all see come in, and how you're going to implement it we can all talk about it and understand how that's going to roll out. So I'm cool with that.
Yeah.
All right, cool. All right. So those are my risk questions. All right, now I want to figure out how the vault, treasury, and portfolio work, and how this ecosystem generates revenue. Do any of you guys want to tackle that one?
Yeah, why don't we usually go, I'll take the vault, Crip can take the portfolio, and then Chrome can go through the treasury. So the vault, real quick. So vault's my favorite because that is really the holder and the creator of our C tokens, or the commodity tokens, right? So when you look at the vault, it's actually going to operate on a multi-chain basis. It will be responsible for the gold holding the Pax G on the Ethereum side. It will also be responsible for minting the CGLD and other C tokens on the Binance side. From a revenue stream standpoint, from the start, the protocol, the vault, is going to own the entire CGLD USDC position that's put into circulation. So that will result not only in, I would say, traditional mining rewards, but also emissions, which is dual in the form of CLF and Vertek. And then also that's going to result in some of the fees that we had talked about earlier. So the 2% in, 2% out fee that results in trading in that pool is going to result in revenue directly in the form of BPT or liquidity coming to us. So essentially, it's going to generate revenue in those multiple different fashions, and that's the vault.
Perfect. I'll cover the portfolio real quick. I know it's the third and final key on the white paper or the docs, but the portfolio is, it seems somewhat complicating if you look at it, but it's really simple. It's basically the key component is outside revenue generation, right? So it's going to benefit the protocol and the holders. It's basically a collection of on-chain digital assets. They're focused directly on that outside revenue generation. This takes place in both, I shouldn't say in both, but in many different ways, whether it be through altcoin investments, liquidity mining and yield farming, liquid staking, select NFT and altcoin holdings, also trading bots that we're looking into as well. So that will be take place over time, and is right at launch, this portfolio will be going to work. So you can expect to see some nice updates leading up after launch on where we're headed with the portfolio.
Hey.
Yeah, and I'll cover the treasury. So the treasury acts as essentially just a traditional treasury like you see in a lot of other projects. It'll be the essentially like the bank for the CLF token, as well as the holder of POL, which is protocol-owned liquidity. That liquidity position being, as you see up on screen, CLF and Bitcoin. So in the same sense of the vault, it'll be a liquidity position that's staked on the DEX. It'll probably be split up, so not all of the POL is staked on the DEX, but a good portion of it, so that it's earning the dual token rewards, as well as constantly getting those trading fees. So yeah, you can think of it similarly to the vault, but it's going to be specific to the CLF token and its liquidity.
Okay. And will the treasury also be used for operating costs, team salaries, anything like that as well?
Yeah, you can see it in that
Marketing
sense
and-
as well. It'll be a mixture kind of all three of the revenue streams, generating stable assets and obviously like Bitcoin and the gold and everything. But yeah, you can consider that the treasury, it will be earning like the fees that we have for within the protocol itself for claiming rewards and everything like that. Those fees will then go back to the treasury, which can then obviously get used for growing its position, giving out rewards, as well as just having extra capital on hand to maybe buy up some more XCLF positions that are on the NFT marketplace. Yeah.
Okay. And I really like the breakdown page that you have in your white paper. It just gives you quick bullet point of like the main pieces of critical information about the portfolio, the treasury, and the vault. So this is really good if you want a quick overview of how each one of these will work and how they're going to generate revenue that then gets distributed back to participants. And they've got a great infographic here as well showing that breakdown. So check this out. Now, with all this being laid out and with what we talked about with the CLF token and the liquidity pair and the locked staking mechanisms and like the triple yield process that allows, what do you guys think is the best strategy for participants in collective finance to make the most amount of money or make a modest amount of money in the safest way possible? Either or. What do you guys think?
I think a good place to start would be with the CLF token. So it depends on what your risk appetite is like. So if you're here for the gold and the commodities, then you come in, you get a whole bunch of gold, and you can earn yield on the gold. So that's one. Then the second part is there's always that part in us that kind of wants to go for this more speculative token as well as the higher APRs, and let's say consistently yield. So that's what you want to go for the CLF, the XCLF lock staking platform. So I would say probably you want to split your capital between the two. Let's say how much gold you feel is you want to acquire right now. Do you feel like gold is a good time to buy? Is it a good time to acquire gold? Then get a little bit more gold. It's not a good time to get gold. Just get into the CLF, and you'll naturally be receiving gold as part of the rewards. So that's an important thing to note there. And then if you're an advanced investor, then you can try to do some meta gaming with the XCLF staked locked stakes, because you can get on the marketplace. You can move them and sell them around. So maybe I didn't cover this before, but each of the stakes, when you perform the lock, is an independent NFT. So let's say, for example, you locked up $1,000 in the 90 days, and then tomorrow you lock up another 1,000. They're both separate. So if you want to hold one and have that generate yield for you slowly over time and consistently, you can do that. And the other position, maybe you want to look for a spike and then liquidate it through peer-to-peer trading. That's fine as well. So yeah, definitely. If you're interested in the finding out what is the optimized strategy for profit taking on the platform, definitely you want to get into the XCLF trading, NFT trading.
Okay, so max yield hunters would be messing around with the XCLF NFT staking stuff, right?
Yeah, I think exactly what MP said. Some people could be looking to maybe buy up a strong XCLF position and then sell that to somebody else for maybe a higher value than what they created it for, because they think it's going to be earning substantial rewards over time. There's a lot of different strategies, and I think we'll see a lot of people come up with their own strategies once we launch.
Yeah, and by participating in and owning XCLF, it's going to give you the opportunity to move forward in however you see fit. Just like NP said, we all have our own taste. We all like our own flavor of ice cream, right? Same thing in investing. So whatever way whatever way everybody wants to move forward, we're sort of putting the pieces there for them to be able to do that, right? The other thing is that by participating in the lock staking program, it's that multi-layered yield. We say that a lot, but there's actual real meaning behind that, because you're going to be earning yield on all of these different layers, and they stack up. So you're mining, you're earning CLF, you're earning VRTK, you're earning gold, you're earning stables, you're potentially earning Bitcoin, right? That's how our protocol is designed. So, not financial advice, but I think, if you follow the path, that's where it leads you.
Yeah. So just to clarify, with the XCLF NFT staking, you get 4 rewards: C Gold, USDC, CLF, and BTCB.
Yeah, we're trying to get the Bitcoin in there. We originally had it at 3 rewards, but now we're trying to get Bitcoin in there. So this goes back to our talk about the stable coins. We initially had we're thinking about pairing CLF with BUSD, right? But everything that happened before in the pivot, and actually we had talked with some of our angels, and that led to the change. But yeah, hopefully we're going to be able to get all 4 of those, and then you have everything you need to participate and or take profit in a healthy way.
Okay. And the reward breakdown is here. Now, do you have any projections on, I'm not saying this is any kind of guarantee of returns or anything like that, but I'm saying, do you guys have any projections if I were to come in here and throw $1,000 in XCLF NFT and just stake it for, any one of these? Do you guys have any idea of what I could be looking at in terms of rewards, real world rewards, based on any estimates or projections you have?
We'll see what these guys say. My personal answer is no right now. I know that's not the answer that everybody wants, but when you look at all the variables here, right? So look at the different tokens we're giving out in rewards, the different price variation they can have, the weight that they're going to have between the different pools. I just don't think we could comfortably give people a number that we would feel would be reliable at this point. So, maybe the guys have a different answer, but and I know that sounds like a cop out, but I don't think we would be giving people an accurate answer, which wouldn't be fair.
Also, another thing to consider would be upon launch and the staking platform going live, it depends on how much TVL comes in. So if a whole bunch, millions and millions of dollars comes in, then we need to tune up the emissions slightly to keep the APRs attractive, to incentivize people to continue, right? But on the flip side, if TVL is a lot lower than projected, then we want to tune the emissions down a little bit so that you're not putting a huge amount of tokens into a small amount of hands. So
yeah, there's a lot of variables when it comes to this, because as MP said, it's based on TVL, it's based on token price, it's based on how much we raise in the pre-sale. There's so many different factors that go into it. It's just not good for us to even have even suggest any type of APR or APY, because some people might come back to us and say, hey, you talked about this, here, but now we're getting this now. So it's way better for us to just not promise an APR or promise an APY, because obviously a lot of projects that do end up failing because you can't sustain those promises.
Yeah, I agree. And that's why I'm very careful with how I word that. None of this is guaranteed returns of any kind, right? This is a DeFi experiment. We'll see how it all plays out. There's so many factors, but I was just if you had a guess, could I make 1% a month or something on my yield, right? Is that unrealistic, or what do you guys think?
You're prying.
I'm trying.
Well,
That's my job. That's my
You're
job.
I would say this. I would say this. Think about all the different layers of yield that you're getting, right? So like go off the first, just for staking, you're getting CLF and VRTK, and then for lock staking, you're adding that next layer on there. So,
Right.
without giving you a number, it seems pretty appealing to me, at least.
You can think of the entire system, right? Like a truncated yield optimizing protocol. So usually yield optimizer, they focus on one flywheel or kind of strategy, and then they compound it in order to try and optimize yield for everybody. Because sometimes if the capital in one wallet is a lot, that will optimize the yield that it can get rather than the same amount of capital spread out amongst a lot of wallets, right? So that is true for the treasury, which holds the POL, because that'll be staked on Vertex. And then there's the treasury also takes a position in the V system on Vertek. We won't go into that now. We can touch on that in our next video. But that essentially boosts the yield that comes out from that. And then so it's more efficient that way to yield from that way. Then there's also the vault and the portfolio, right? So based on the performance of the vault and the portfolio, you'll see two things. One is the increase of the collateral ratio. Second thing would be the rewards that are fed back into the CLF staking platform will vary slightly based on the performance of the portfolio. So the nice thing about that is we do lean on and leverage a little bit on the community as well as the angels to see if they got any introductions for very, very good DeFi yield farming protocols or projects. So we can put our stuff there. It earns good money. It comes back and it still gets distributed back to them, and it's growing the vault at the same time. It stands to reason if there's a way to optimize yield and the treasury already has a position in the Volta, then it stands to reason that makes no sense not to vote for itself, right? So it creates a self-driving loop. You bribe for you bribe your own gauge, vote for your own gauge. The emissions go up, take those emissions, compound back, your power gets higher, and you keep doing that. So this has been quite popular. This is not new. It's been around for a while. It's just that not a lot of people can do it because there are not a lot of balancer dexes around. So
that's why I'm asking you, since you're the founder of Vertek, you know what projects are onboarding, and I'm trying to pry the information out of where does collective finance stand in the other projects on Vertek or launching on Vertek in terms of voting power and governance. What's the likelihood that collective finance and their treasury and participants are going to win that vote every week or whatever to get the boosted rewards? Because I have seen it in a balancer style decks, what those boosts can be like, and they could be outrageous. All right. In my personal opinion and experience, I've seen outrageous boosts. All right. In terms of APR percentages coming back, like daily percentages, just like ridiculous for whatever you're staked in. I've seen it work on stables. I have seen it work on blue chips in balancer style dexes. So with all that being said, do you think collective with the treasury and all you guys and all the whales and all our participants could just like keep winning that vote and getting super boosted pools?
Well, they will definitely want the treasury would definitely want to get to a nice balance where it can capture the 2.5x yield, but it also doesn't have too large a position where the capital can be useful elsewhere. So I think the idea here is try to increase the position of Volta at the same time that the protocol own liquidity increases.
Yeah, and NP's been very gentle in the way he answers your question. Let me be more to the point. Yeah, absolutely. We have capacity to direct votes towards our pools, and that will be done just based off of, number one, collective finance has a position in Vertek, in the Volta, so we have our own internal, and then our founders and the folks we roll with like Vertek as well. So we'll be
awesome.
all right.
All right, good answer. Both of you guys, with all that, I'll put it together that we're probably going to see some boosted pools, especially early on with Vertek. So that's my guess, just based on knowing a lot of the people and projects involved in all this. So Cool. Awesome. That changes a lot of things for me personally now that I understand that aspect of it. So not financial advice, you guys, and I'm not trying to be elusive and alluring or anything like that, but I have seen it in the previous balancer decks when people boosted one of those pools. Like I was making like 1% per day on like stable coins. It was stupid, right? It was stupid. That was on stables. That was like the lowest yielding pool too. And then I saw it on like blue chips, and then I saw it on some project specific tokens. Dude, some people were making like 3, 4, 5, 6% per day on some of their positions in those pools in terms of return. So like, I know a lot of this might not make sense to some of you guys who don't understand the V system, the gauges, the weights, the balancer style dexes, the curve wars, the bribes, the this, the that. But like, if you have an advantage with the voting system, and I know a lot of people say, oh, curve wars, voting this, voting that, to try to sound alluring for things. But no, but for real, if you can get the vote for that 2.5x reward boost that NP mentioned, 2.5x reward boost, right? If you're making 1% on a pool and it's 2.5x, like that's what, like 2.5% on that pool, right? Or I don't know how that
math.
Exactly.
Yep.
That's math, right? That's how mathematics works. So that's pretty nifty if you ask me. And I even went out, I invested in one of these things. All right, it's a calculator, and it does these things for me that I don't have to do in my head anymore. Like when some of those pools were making like 2% per day, and then they got boosted to 2.5x that, it got stupid, right? And the thing is, unless you have an education in how DeFi stuff works, you completely missed it, right? That's just the way it is. So if you're listening to this all the way to this point, and I might put this in the beginning so you guys can get like more of an education on some of this stuff, you will be in a position of knowledge that might give you an edge over other people who are liquidity providers in the Vertek decks. If you know which pools might be getting, might have an advantage in terms of the governance and the boosting, like that. I'm just saying, I'm getting excited just talking about it. I didn't really understand how this all tied together with Vertek very well until now, honestly. And I've listened to your other AMAs and stuff, and I've gone through your white paper. But like NP, you alluded to it when I asked just now, and then Doc kind of confirmed for me. In everybody's opinions, probably the best way to earn the most yield in collective finance is the triple staking, triple yield reward earning method, where you stake CLF liquidity pair all the way down to the XCLF NFT, and then you can further boost those rewards if you understand how the Vertek DEX works and the Volta system, and taking advantage of that to get the boosted rewards based on the periodic voting system that boosts certain pools. Okay, now I know that's a lot, and you can dive into that later, but if you understand how that works, if and when that happens, you can get like up to like 2.5x. You're already the rewards you're already getting. All right, so that makes things get crazy. Now, I think we all agree that that's potentially the best way to earn the most amount of yield in this. Is there anything else that I missed?
Yeah, I would say, don't take your eyes off of the native token CLF as well. CLF is, it's the reward token. It's also kind of the oil that drives the collective finance engine. So there is a potential upside in that as well as time goes on. And as we launch this thing, it's a very good possibility that folks are going to be wanting to take profits on that token as well. So make sure you hold a little bit of that as well.
Yeah, I mean, the system's set up for that, just to add on to what Cripsam was saying. So if you think about it, from launch, we're not giving back free CLF, we're giving back liquidity, right? Our angel seed round investors, the way that's set up, they receive locked positions as well as a vested token allocation. So when you put these two things together, right? So what does this mean? We're going to incentivize people to lock and really to sort of put those tokens away. And then there's not a lot of free circulating supply. So both of those two things they decrease sell pressure dramatically, right? If you combine that with some increased buy pressure, then I think potentially the volatility could play to your favor, right? So again, not financial advice. We're not promising anything, but when you look at how things are designed and the setup, right, that's the situation.
Yes. Yeah. Good point. Thanks for coming in there, Doc. Again, yeah, it's not financial advice, but this is kind of how we see fit.
Okay. So could you sum that up in just like real basic, what would you do, Doc? Again, real quick.
Yeah, absolutely. So I think the main thing that I would be doing if I was participating coming in was when I received that liquidity position, I would be looking to stake that and then lock that as XCLF to start getting those rewards, right? Immediately. One of the things that you want to keep into consideration, I think this was the point that Cripson was making, that if there's potential for the CLF token to have a significant price increase at the time of launch or even down the road, you want to be able to take profit as appropriate, right? Now, how could you do that? You could do that through the rewards that you earn through your lock stake position. It could be through the NFT that you own. You could break a small amount of your liquidity or a combination thereof, right? So I guess that's the point, to be able to use that volatility potentially to your favor when the situation permits.
Okay, good to know. And I could see that volatility going up if and when the voting happens in the Vertek gauge system, the Volta, if any of the CLF pools got voted for, or even Seagold or anything related to collective got boosted, I could see a whole bunch of people buying up CLF tokens, pairing it, and then going down the triple yield staking process, right? So I could see that volatility at that point that you're talking about, Brian, especially during the voting periods. I would be on the edge of my seat, actually, be like, which is going to win the vote this week? And if it's anything collective, you're probably going to see a spike or something, or increased buy pressure. Just my opinion. Who knows?
Yeah, and remember, there's decreased sell pressure too. Sorry to interrupt you, but just like NP said before, right? If you have your XCLF position that's represented by an NFT, and maybe that's in a 60-day tier, but it's going to unlock in a few days, right? And it's timed with the emission votes and things, that could become much more valuable at that time. So there's the primary market you can play. There's secondary. There's a lot of things to think about.
There is. And also, if I'm looking to take a new position in collective down the road, I could check that Vertek NFT marketplace and see if I can't pick up a staked position that I was looking at anyway at a 5, 10, 20% discount because somebody is trying to trade out of their position to gain, for whatever reason, or to make some, maybe they're selling at a profit, but I'm getting in at a discount just because of the timing of things, right? Exactly. So there are efficiencies there that I think people can find if they look around and kind of try to figure out how this all works. And it's not that complicated once you go through it once or twice. Really, it's like you got your main CLF token, and then you got your commodity tokens like Seagold. And with your CLF token, you basically can like liquidity farm with it 3 times over. And at the end, you got this like really interesting derivative product that has a marketplace on Vertek that you can trade and make potentially even more efficiencies with your capital, right? So like the CLF has like a whole stack of ways to make yield from it. Now, I really want to understand, because I love the potential of storing my value in gold and gold-backed digital assets, right? So it's a really cool idea for me if I can earn yield on my gold position. Now, how can I earn yield with C Gold?
Yeah,
Go ahead.
Yes. With C Gold, the best and quickest way and the main way for you to earn yield is to create a liquidity position with it. So you can solely just hold a LP position. You'll be earning the trading fees, but to then fully capture and earn the most rewards, you can stake that LP position on the Vertek DEX to start capturing both the dual token emissions, which would be the Vertek token and the CLF token. And so there you can go and with the CLF tokens, you can start creating XCLF positions. With the Vertek tokens, you can start creating a Volta position, which will then, obviously, as we just talked about, boost your yield in that pool. So there's a lot that you can do there.
Okay, so if I want to earn yield and rewards with my gold, then I would buy C Gold, or I would earn it through staking CLF stuff all the way down. So either way, I would get my hands on some C Gold. I'd probably just buy some personally. So I'd buy some C Gold. I would pair it with some other thing in a liquidity pair. Are those liquidity pairs for C Gold set? Are they defined by you guys? Is it like C Gold / BTCB, C Gold / USDC? What are my options there?
Yeah, right now it's CGLD and USDC, and the idea behind that is that it's really sexy and appealing to put gold with Bitcoin, but if that was the case, you wouldn't be mimicking the price of gold, that exposure, right? So the idea behind it is that people who get in gold, they want exposure to gold,
right? That's what I want.
Yeah,
yes,
yeah, exactly.
If I want exposure to Bitcoin, I'm buying Bitcoin, right? Like
exactly.
So.
Yeah.
But with gold, I'm either buying physical, or like I have to do some weird stuff with gold ETFs, or like PAX G on Ethereum, and I hate Ethereum network personally because I don't have $5-10 for gas, right? Or like gold miners, right? But that's, again, there's fundamental risk there with like the gold mining process, company management, minerals, everything. Like there's so much that I just don't have access to that information, or it'd be just a nightmare to figure out. So with this, I just want exposure to gold, the value, the dollar value of gold essentially, and I can earn yield on that. You're saying by buying C Gold, which is over collateralized, and then I can pair it with a stable coin, USDC, and then I can stake that liquidity pair, C Gold and USDC. I stake it on Vertek's DEX, and I earn the Vertek token as well as the CLF token. So I earn the Vertek token from the Vertek DEX, and I earn the CLF token from Collective Finance, and that's my reward, right?
Exactly.
As well as the trading fees, yeah.
As well as the trading fees and like the liquidity pair fees. Okay, so cool. I can that is what I'm gonna do probably. Full disclosure, people. Next precious metals purchase I make, which is coming up, probably gonna buy a little bit of gold, a little bit of silver, and then I'm probably gonna split my gold position up and get some C Gold, pair it with some of my USDC, and I'm gonna farm with it. I'm gonna farm Vertek, and I'm gonna farm CLF, and then I'm gonna be like, okay, what am I gonna do with that CLF token? Well, I might sell some of it and take some profits, or I might buy some Bitcoin, BTCB, or a representation of Bitcoin, BTCB, and I might pair that, then I might stake that, and then stake that, and then stake that, and and then earn yield on all that as well. So, like, talk about some people talk about like infinite money loops or like flywheels and things like that. This is I just, from a total noob perspective, who has only a surface level understanding of this, has now figured out I can take the money I was going to buy some gold with, and I could buy some essentially digital gold. I could put it with some of my fiat, but it's a stable coin, USDC. So I could take gold and stable coins, pair it, stake it, earn Vertek and CLF. I could sell either one of them straight up for cash profits, or I can then pair those with Bitcoin, like CLF with Bitcoin, and restake that, and then restake that again, and restake it again, and restake it again. and get yield all along the way. It's a really interesting concept. And all the while, I'm basically holding my value essentially that I started with in gold and a stable coin. So
Correct.
that's my favorite thing. Full disclosure for everybody listening, the YaBonks strategy right now that I'm figuring out, and this is a project that I am personally excited by and about. I love the concept of all of this, earning gold as well as messing around in the balancer style dexes with the boosted pools and multiple yield farms layers. But I'm going to buy probably $1,000 so I can get that NFT, the pre-sale NFT. I'm going to buy $1,000 of the pre-sale so I get a 10% discount, get the NFT. I'll figure out what to do with the NFT later. And then I just love NFTs, right? Especially ones that like are utility ones that give you like residual
Gold.
rewards and stuff.
Give you
Dude.
gold
All right.
and stuff. You know, I mean, who doesn't like a little bit of gold?
Sold.
Just a little bit.
You sold me right there. All right, I'm gonna get $1,000 because every $1,000 increment of pre-sale, I get an NFT that makes gold, and then I'm gonna take my pre-sale liquidity tokens that I get, and I'm just gonna stake them. I'm gonna stake them. I'm gonna stake them. I'm gonna stake them, and I'm gonna have these NFTs that I'm gonna hold, and I'm gonna be getting rewards all along the way. And heck, I might just stick those NFTs up on the marketplace at a something that I would think is an out of the money premium. And if things change in the market and one day somebody wakes up and says, "Oh, that's actually a really good deal," and they take it, then I made my target profits that I was looking to make. Even though I might not want to sell it if at that point, but you know, there's that like crossover. Anyway, so many strategies here, but that's what I'm going to do. I'm going to get it on the pre-sale at about $1,000. Going to get the NFT. I'm going to stake. I might test the waters with a 30-day or a 60-day. Heck, I might go balls to the walls and do 180-day because I'm crazy like that. But then I'm probably going to, on my next precious metals investment, put half of my gold investment into C gold. And then I'm going to take that with some of my USDC, pair it, stake it, and then get Vertek and CLF, and then kind of loop that into the ecosystem again. So that's my strategy. What do you guys think of the YaBonks strategy there?
Oh, I think it's a great strategy. That's the one I'm going after.
Yeah, exactly.
I'm gonna get the gift. This you stake it. I gotta get that. Get that gift.
Gotta get the manic eyes in there. That really shows how many stakings is happening, right? So
yeah,
exactly.
You get the CLF, you player it, and you stake it, and you stake it, and you stake it again.
That's right. Yeah.
So, hey guys, this has been great. I've learned a ton, and I think I got to where I need to be with understanding my risk reward ratio with collective finance, and with everything we talked about, I am personally going to take up a position with this.
Thank you, man.
As soon as I can convince my wife that this is she's all like, "What is DeFi again?" I was like, don't worry about it. It's fine. And she's like, "Where's this magic money coming from?" And I'm just like, it doesn't matter. It doesn't. It's internet magic. All right. But no, this is going to be one of those ones that I'm going to dip my toes in on. I like all you guys. I've known you all for a while, so I have a high level of trust with you guys, more so than 99% of the people out here in DeFi. So you guys are in the upper echelon of my personal network, and I think you guys have a really cool idea. I personally am a precious metals bug myself. I don't have a ton of it, but I believe in it in a philosophical, historical perspective. And I think any person who is trying to protect their wealth and is any kind of a prepper or anything would have some cash on hand, some precious metals on hand, and some Bitcoin on chain. And I think you guys provide some interesting vehicles for having exposure to the gold and the Bitcoin and silver and diamonds coming down the road potentially, and allowing people to earn yield while holding something that would be normally a stagnant commodity that just maintains and retains value. But now you guys are providing an opportunity to not only retain the value of your gold, but to earn incremental yield rewards on top of it, however much that is, we don't know yet. We'll see how it all plays out. But anything is better than nothing. And I think we fully covered what like the risks are and everything in order to achieve that reward on your gold exposure holdings. So that is my conclusion there. Did I sum that up effectively?
You did great.
I'd say you nailed it.
Yeah. All right.
I'll put the gold stamp on it, man.
There we go.
Yeah. And thank you too for saying those things. You know, it means a lot to us when folks like you, you know, who we respect their opinion so much and see a lot of protocols come across your radar. So we really appreciate you saying that. So thank you, man.
Mm-hmm.
Hey, my pleasure. It's the truth. That's what I speak. Sometimes it gets me in trouble, but like if I have something good to say about somebody, I will say it. I'll go out of my way to say it. So I think you guys are the right people for this project, and it inspires confidence in me that you guys are going to manage it well. And like I said, I'm going to put about $1,000 to test the waters in on that pre-sale, which is a lot for me. It's going to be one of my larger DeFi positions. And then on my next allocation for precious metals, which isn't going to be a ton of money, but like I will split my gold investment that I was going to make, like $500 or something. I'll put half of that into C gold, and then I'll take some USDC I got lying around, stick it in there, and put it to work in Vertek. So yeah, this is really cool. I'm excited about this one, honestly, because like I said, I'm a precious metals bug, and you guys are allowing me to make yield to earn rewards on my precious metal holdings in a way that's over collateralized and minimizes risk and custodial risk. Like I don't have to have like a kilo gold bar, which I can't have anyway yet. I'll get there someday. But if I did, you know, there would be thugs breaking down my door trying to get that kilo gold bar, and I'd have to kaplow, kaplow, kaplow. You know what I'm saying? Molan Labe, right? And I don't want to do that. That is the last thing I ever want to do. So I would much rather minimize my custodial risk of my precious metals, only keep like a month's worth of expenses worth of precious metals on hand, and then the rest put into a more liquid form that has better custodial practices like you guys with over collateralization of the gold, as well as that over collateralization being in PAX G, which is audited with 1-to-1 physical in vaults that are, you guys can look into all that. And I love it. I love it. I think it's a great idea. Full transparency, you guys. I have a positive sentiment here, and these guys didn't pay me to act like this. This is my honest emotion. They paid me for my time to work on this video, but like if this sucked, I would say, hey guys, I think this kind of sucks, right? But I don't. I think this is actually pretty good. And I think it's in something that I think is really pertinent right now, more than any other time in history, for the most part. But like, I feel like our monetary system's about to implode. I feel like fiat's about to just get wrecked. Honestly, personally, I don't know when it's going to happen. Not financial advice. I'm not a financial advisor. I can't tell the future, but like our monetary system's like so out of whack, and they're just kicking that can down the road, They're manipulating this stuff on paper day in, day out. At some point, this is going to get called in, right? And people are going to say, I want my physical. And they're not going to have enough physical for the amount of paper receipts they've written, right? Yep. They're not going to have enough CLF for the XCLF receipt tokens they got in their wallet. You know what I'm saying? You know, but you guys, you understand the analogy, right? Like they're writing these receipts that they're writing checks.
They're writing checks they can't cash.
They're writing checks their bodies can't cash. You know what I mean? But they're writing checks that their bouillon can't cash. And and at some point, it's going to short squeeze like crazy. When that comes toppling down, I have a feeling silver is going to go up a lot, and I have a feeling gold is going to go up a lot. And even if it's momentarily, even if it's for like a few days or a few weeks, where this like goes like 100x and this goes 10x or something like that, and we see that, hopefully I'm going to be in a liquid asset that I can move around quickly, that I can capitalize on that rather than me standing in line at the pawn shop being like, hey, what can you give me for this? Oh, a 50% premium over spot? What do you mean? Right? Like, so I think this is actually really cool idea for me to have some liquid exposure to this stuff in a way I can earn yield and get in and out quickly if I need to. So boom, there we go. Where do you guys see this in 6 months to a year, 3 years, 5 years? Where do you guys see this way down the road in the future?
Go ahead, Crip.
Yeah, I think that you see us in launch or launched already and plan in motion and earning rewards at that point, and good proof of concept and things rolling down the road, checking boxes. You'll see a great updated roadmap well before then. We're here for the long term, the long vision. Hence why my face is right here. No, this is not artificially generated. This is me, the one and only Crip Zom, or Zacharias, also known as Zacharias. So, call me anything. Zacharias, Crip Zom, anything you want. I'll be here.
Yeah, I think we see ourselves down, especially 3 to 4 years, really long term, really expansion is what we're going to be looking for. So you could see CLF, C Gold, C Silver, C Diamonds on other networks, like Arbitrum, AVAX. I think true expansion growth is what we're aiming to do over this time, because like BSC is just the start. It's just where we figured it's a good place to be. It's a good place to start. It has low fees and everything, but we want to broaden that exposure to not only just participants on BSC, but all over the blockchain. We want to be able to provide that safe, secure, and yield earning potential to these hard assets that we believe everybody should get that exposure and get into, even just to test it out. So it's really about widening and broadening that exposure. Yeah.
Nice. Cool. Well, that's very promising. And I'm going to jump in with 2 feet on this one. And I got one last question. It's a curveball. You guys, are you ready for it?
Yeah.
Bring it.
Right,
I was a pitcher, not a catcher, but I'll try.
Well, today I was outside taking notes on collective finance, sitting with my goose, Bonks, Godric, right there. His name's Godric, aka Bonks. That's where my name comes from. And I was sitting there and I'm like, Bonks, how does this compare to buying gold miner stocks or a gold ETF and selling puts on them to make additional yield on digital gold-based assets? How does what you guys are doing in terms of like staking the C Gold LPs, how does that compare to just me like getting a gold ETF and selling puts on it to make some additional yield?
I would say what you just explained is extremely complicated and not for the average user. Something that we're doing is something that anybody in DeFi can easily get into. Buying a token is something that everybody on the blockchain does. You have to know how to, go on to Uniswap, PancakeSwap, these things like that to exchange tokens to buy a token. That's all you need to know how to do to get into gold and gain that exposure. With what you just explained, I'd say not the average person has that setup and that capability to actually understand how to maximize the profit off of that.
Yeah, it's also a time factor, right? With when you look at it, the exposure through collective finance and C Gold, you set it and forget it once it's in there. You don't have to do anything. You don't have to worry about timing of calls, anything at all. It's there. It's earning your yield, right? It's consistent. So big difference.
Okay. Got it. Yeah. And to each point, there's technical know-how to either one, trading options or staking LPs in a balancer decks, right? Like you got to know some technical stuff either way. So it's kind of a barrier of entry for both processes. And Doc, to your point, yeah, I don't have to worry about expiration dates and rolling over and things like that.
Yep.
And also I feel like potentially the yields would be higher here because the premiums that I've gotten in the past buying and selling gold ETF or silver ETF options or miners hasn't been that great because they're so diluted. and it's saturated. So those premiums get eaten up pretty quick. And they're not as crazy volatile as some other stuff. So I think, And as NP said earlier, you kind of answered this earlier, NP. This is 24/7, 365. Trading options. Robinhood works on my phone 9 to 4 o'clock, 3:30. I don't even know. I got nothing. Yeah. So and no weekends. 9:30 to 4 Eastern time. I got to do my trading Monday through Friday, sometime, and not on holidays. So if a USDC depegging happens again because SVB Bank goes down, I'm panicking for 3 days straight, freaking out kind of deal. Whereas in DeFi, I have full custody. Nobody can tell me what to do. I do whatever, and I take my own risks and I make my own moves, and I can move in and out of positions any time of the day, 4 a.m., 3 a.m., because I'm a night owl. I think that's probably one of the best reasons for me to go with this route versus me trying to sell puts again, picking up pennies in front of the train. You know what I'm saying?
Well, yeah. It's also the case that you don't own the assets when you do that. So you're using the movement of gold, not gold itself, the movement of gold to try and get fiat. But as we discussed, the reason why you want gold is because you don't want fiat. so when you create liquidity with C gold instead, you earn C gold. So you're putting up gold to earn more gold, which you then combine with a little bit of the fiat side for a hedge. So you get the benefit of the gold appreciating, and then as well as the earning token being more of it.
So the earning token in the C gold USDC LP staking pool is more C gold, or is it CLF?
It's CLF. Okay, CLF. C gold can be added, but as you know, our staking platform does have the C gold as the as one of the reward tokens. So yeah, got to keep that in mind. So imagine, you think of your liquidity position as your portfolio.
So with the C gold pool, you're getting. Now, I just thought it was just the Vertek token and CLF token, but you're saying it gets the full spread of reward tokens in the pool?
No, it will start with VRTK as well as CLF, right? And then your CLF, you use that to get more C gold, right? Yes, so you got your liquidity position. Okay, so let's say your C gold is your portfolio, and you want to maintain it or watch it grow. So you're getting rewarded with the tokens that you're getting rewarded. You create a lock position, which then rewards you more gold, which you then use to compound your LP position to bigger. So eventually, what you get is way down the line, you just have a whole bunch of gold, and with the appropriate percentage hedge in fiat. So
I see.
As you did mention earlier about the traditional banking sector, when that happens, you're going to have more gold, which is what you want. In versus what you described earlier about putting put options, that will get you more fiat, not more gold.
Well said, MP.
Yeah. Otherwise, I would have to manually take that fiat and then go buy more shares of gold ETF or whatever miner I'm playing, right?
But that won't work. That won't work because the reason why you got it in the first place is because the price went up. So your entry point is already bad.
That's also true, unless I'm playing implied volatility.
Okay, right. That's also fair.
Yeah. So I get it's situational there, but in that case, that would be I would be buying it the same unless the volatility is what I'm playing. But I'm not going to get into options trading right now, you guys, because people are going to be like, options? And they're going to be like, I heard YaBonks talk about options. And then 3 days later, I lost everything. YaBonks, what the hell, man? And I'll be like, so I'll have to do an educational options trading video at some point just to go over the basics for my audience members who might not be familiar with that yet, or who haven't blown up multiple accounts playing those cards yet. Yeah. So, all right, you guys, this has been fantastic. You've answered all my questions. I can't think of any more right now, but I got a whole bunch more coming with silver and diamonds. So when you guys roll those out, give me a call because I got a whole bunch of stuff I would love to talk about with you guys. about silver and diamonds when you guys roll those out too. So do you guys want to say anything to the audience, any parting words or anything else that you think we didn't touch on yet?
I'll just say one thing in particular. We're really focused on doing everything we can do on the back end to make all the ends meet. And we just ask everybody to, lightly spread the word, show folks, Collective Finance, our pre-sales open. We welcome everybody with open arms. So come on into our Discord server. If you've got any questions, ask around or open up a ticket. If you got something in particular, we're happy to help out. The team's very active, and we're here for everybody. So come on over.
Yep.
Well said. Anybody else?
Yeah, I want to say thank you to you for having us and hosting this, and thank you everybody for watching. It's sometimes you have to listen to us get a little bit long-winded, but I hope this was beneficial for everybody, and we always love it, man. So thank you.
My pleasure. Thank you guys for coming on my show and going through my grueling process. I know we started around 10 p.m. and it's 4 a.m. now. So you guys are troopers.
Yeah, man.
Yeah.
See you soon, man, Alex.
Yeah. Hey, NP, this guy, he must be a masochist because he's got another AMA with me in like 2 days. So yeah, enough time to recover.
Very much looking forward to it.
It'll be fun though, man. Now that I understand more about Vertek and balancer dexes in general, I think we can really have some really cool discussions about strategies and the inner workings of all that stuff. So yeah, I'm looking forward to it too, man.
Awesome. Well, thanks, Alex. That was a really great time.
Hey,
That was awesome.
Thanks, Zach. Thanks, Jake. Great having you guys on. Brian, NP, I will talk with you guys soon. I will get this video out as soon as I can. For everybody watching, check out collectivefinance.io. Check out their Discord server in the description of the video. Their pre-sale is live right now. Check out their Discord, get all the announcements, and thanks for watching. Bye.